Yep. Confirmation on the live front. What's up? What's up? What's up? I'm Spencer. There's Aaron.
Happy Tuesday, everyone.
It's Fat Tuesday, AV.
Fat Tuesday.
It's Fat Tuesday. Wait, let me fix my...
Everyone joining us in a place where they celebrate Mardi Gras. Maybe you're down in New Orleans. Maybe...
Question for you, because like me, you are also not a born and bred Michiganer. Do you know what a punchki is?
I do.
Did you know about that before you moved here?
Yes.
I did not know that. Okay. We don't have punchkis where I'm from. Apparently.
They have them in Chicago.
Must be a Midwest thing.
Yeah.
Not an East Coast thing. Anyway, happy Fat Tuesday, everyone. It's time for Benzinga Live. We got David Green here to start us off. And 2.5 hours to hang out and talk about whatever we want to talk about. So smash the like. Here we go. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news. All right, let's bring on our first guest of the day. It is a man masquerading as David Green. I'm not quite sure what's going on here with the hair. David.
Yo! Canceling.
Yo!
Limited for now. What's up, guys?
What's up?
This is what the market does to you.
Can we confirm this is actually you or not? Yeah. Not your like evil twin?
Yeah, David's twin.
David's
brother.
evil twin. Bizarro David Green.
Everyone in my room said, "Dave, you just have to leave it the way it is. Go on. This is what it is. It's natural. The market's been crazy lately, and I'm aspiring to be Pete."
Is this an indicator for how wild a few days it's been for you?
Yes, that's the whole point.
The messy hair indicator.
Yes.
All right.
Is that bullish or bearish?
That's my other question.
It's trade. That's all.
It's trade.
It's trade. You're doing anything but that these days. It's crazy. Did we just miss SC by 13 cents too? Oh my goodness.
What's setting up for us?
Baby.
Let's go ahead and share your screen, David.
Wow, we got it up. We got it. We got it. What are you watching? So you're watching SE.
AMD. I canceled it. Yeah, we're watching SC. We just had an order right here.
Okay.
127.75 after going down $14, and we missed it by 13 cents, and it just went up $1.20. You son of a beeswax! Here's our order. We just missed it, and it went straight up $1, so we'll cancel now. Limited has been on our mind for the last couple of days, right? Anyone get the trend in limited, guys? I think we just missed that too. 451.25. It missed by a penny or so. So limited, we were looking to actually start a little swing trade today. DG in the house. Something's different with David.
Yeah, something is different. That's for sure. Can't quite put my hair on it.
We got bedhead. So we were looking at limited, guys, and I'll show you. I know this stock is going up with everything that's going on in Russia, right? Adam, I didn't do any trades. I don't know what you're doing. I did nothing. Told you guys to cancel. I did nothing. All right, so here's limited, guys, right? 55 points.
Okay.
Above the hold on one sec, guys. What were we in, Adam? I don't know what you're talking about. What were we in? AMD? Yeah, I'm not sure what you're talking about because I canceled it.
Should we be shorting your barber or what?
Well, I usually only go like once every 6 months anyway to my barber.
Yeah.
But.
Yeah. All right.
All right. So let's talk about limited, guys.
Yeah. Okay. Far from moving average trade.
For a swing trade, yes.
Okay.
This is 54 points above the moving average. And these things are all going crazy because of what's going on in Russia, right? This is a defense contractor. So today's the first day, guys. This stock got to about an 82 RSI. Okay, guys, don't do any trades when I'm not doing anything, please. All right. This got to an 80 RSI. So today was what? What's the matter, guys? You want me to go put a hat on? Hold on.
No. It's just I had no idea that it was going to be you were going to be in this fast of a market. No. Don't put the hat on, please. Keep no. I just had no idea that you're in this fast of a market.
Yes, everything's flying around.
The market's kind of took a downturn right when you
As soon
Came
as we
on
came
with the
on.
hair. As
So
soon
anyway,
as you
limited guys in the stock. I'm going to start a little swing trade, and we just think it's getting a little ridiculous overpriced here. We understand what's going on in Russia and all that, but I think we're going to have some kind of resolution at some point. And this thing is it's not earnings. It's not anything else. It's all because of what's going on in Russia. And it's getting really, really stretched out today.
So you're betting against World War III here. I like that.
Correct. I
like that.
Yes. I actually think options is a good way to play this too. So, but yeah, we're betting against World War III for a trade anyway. Yeah, as soon as we came on, guys, the market just took a big dipsy doodle. Holy mackerel. Look at this.
Yeah, Mr. Market does not like the new hair.
Wow. No, that's good for us when the market gets
that's all right. Hold on, everyone. Was there a catalyst here? I mean, that's a pretty broad-based move there, and that's a pretty sizable move. If I pull up, a chart of the SPY, that's not a nothing candle. So
no, that's a huge 5-minute candle. We got some support coming in here, guys. Though at like 430.50. If we can,
people are buying the dip.
The spiders
right away.
Yeah,
I ain't buying the dip yet. Guys, let's put a little bit out in the spiders at 430.50. If we spike down there, we'll do it with a tight stop. Good if we get a quick spike. So we're looking to buy a little spiders here on this big dipsy doodle down here, guys. We have a pivot point down at 430.50. We're straight down 400 points. We'll see if we get a little bounce on that, but we'll keep everything very tight now at stops because there is something going on.
Yeah, I'm trying to find it as we speak.
Limited. Yeah, look at limited now. Limited's getting a little spike down now. So limited, guys. Yeah, let's go out at lose number and limited. In spiders, guys, just a 50-cent stop we can have. Keep it tight.
Yeah, so you're shorting Lockheed Martin here.
Well, we were already. We started a little earlier today. Now we're looking to buy some back here. If we pull back to our 30-minute EMA right around 448, that would be down $6 from where we just were. Everything's starting to come in pretty good now. So now in limited, I'm going to buy a little bit. And that is our 30-minute EMA for a 30-minute trend, and we'll be down $6. So we're going to put a little order out to buy limited now on a nice pullback, 448.30. So it's doing what we kind of thought it would do now. It got really stretched out. Now we're getting a nice little pullback. So we'll cover some of our swing, and we'll get long there. 50 shares of limited, guys, half a lot, and we'll give it $1 stop. So 2 orders out right now. We got the spiders. If we continue this little pullback here, let's see what we're doing. Now we're kind of going sideways a little bit here now, spiders. So here's something that's very, very important when we're doing day trading, right? Yeah, the chart is blurry. I don't know why. It must be on your guys.
Check here. If your charts are blurry, go to YouTube. So go to that little settings gear on the bottom right there. Make sure you're on the highest settings,
resolution,
1080p or whatever it is you got.
Cool.
This is not a nothing candle. Holy cow! What is?
Yeah, but you see how we're getting a little bounce here now, Spence?
Yeah, I'm seeing that, but.
So this is why if we spiked right down to where we were bidding, that would have been a nice little trade for a trade anyway.
Yeah.
So because we didn't get down there now, we'll cancel, and we'll see what the next move is. But listen, guaranteed, guys, if we spike down there, we'd be getting the same little bounce that we're getting now, and it would have been a nice little trade. So I don't know. This might not be news. This is just normal now, guys. This is just normal trading every day that we get. It's nothing out of the usual. We've seen 1,000-point moves in the market several times in the last 3 weeks. So
yeah.
I really don't know, Lou. AMD. Yeah, look at the chip stocks. Chip stocks are getting absolutely decimated right now.
Gosh, this is so interesting because it's the Thursday, Friday, and Monday were basically identical days, David. Right? The futures markets open lower, and at 9:30 comes around, and everything trades higher. Tech trades higher.
Yep.
And this is sort of the unwinding of that. Let's not get ahead of ourselves here. Just because we're down today doesn't. We're not undoing the progress. We're not undoing the gains of the last 3 days, but
not yet.
Not yet. But this is shaping up to be this is a noticeably different day than yesterday, whether you want to look at your QQQs or your ARKK or whatever. Yesterday was all about solar, right? All those solar stocks, they're up a little bit today, but yeah, this is not the
The
same.
energy trade's still on. Chevron's still up 3%.
I gotta admit, I'm totally baffled here on the oil stuff.
Look at oil.
The U.S. is releasing releasing reserves. I know oil hit its highest point in 8 years this morning, but
yes, we're still doing limited, Adam. 448.30. Yeah, look at oil. I mean, just spiked up to 106 here. So look, guys, you know what's going on right now? This is definitely some Russia fear. That's what's going on right now. Look at all the commodities. Look at oil. I mean, that's exactly what's going on. And this is what we look for, Spence. Like you just said, we're releasing reserves, right?
Yeah.
So what is the real reason for oil to be spiking up like this? So I look at that as an opportunity. And if we get really stretched out to the upside, we're going to look to start shorting a little oil. That's the bottom line. Because, you know, technically, again, we're getting really stretched out in this. Yeah, you know, I want to look at AMD, like, because you were saying where are we from a few days ago, right? So AMD's at 116. If we just go back, guys, when it got really bad, AMD traded at 103, right? So like you just said, Spence, we're not giving back a lot of it yet, but you know, we're starting to now. We're definitely starting to.
Yeah.
AMD, guys, I'm sorry. AMD for a trade, guys, 115.20 full trade in AMD.
Because I was just starting to come to terms with the idea that I was wrong to not want to take any short-term longs right here, and but now I'm thinking I don't know if I'm wrong. I don't know what I don't know. So, oh god,
this has been, guys, a trader's market. Really, I don't think you can have an opinion for more than 1 or 2 days. It's just very difficult in the environment that we're in. Long term, is everything going to be okay? Of course it will. This too will pass, right? All right, so guys, in limited, here's what we're going to do. All right, because we got a couple of pivot points coming. I'm sorry, guys, for going in and out here, but we got we got 448.30 and 448.30 and 447.70. Okay, so let's go very small in this thing. 448.30. See, even the strong now, right? Because limited was really strong all day. Even that one's starting to come in now. But guys, 448.30 and 444.80. We'll do little bits here. VIXI's ripping. All right, let's take a look. You know, I always like shorting VIXI whenever the market goes down because that thing never stays up too long. 444.70. All right. We are good in limited. Leave those orders out. We are good in AMD. If we keep getting the spike of Dika down here. Okay. All right, guys, go ahead. I'm sorry.
No. I mean, I'm just.
Well, you were talking about before how this has just been a trader's market, and I agree. And I don't know. I would hate to go like overnight short into positions right now because then any good news on the Russia-Ukraine front and your shorts are wiped out, and then all of a sudden you're upset that there's talks of a ceasefire, de-escalation over there. No, I want to be. That's what I want to be rooting for.
Yeah, that's what we all want to be rooting for.
Yeah.
I put in the wrong price. Oh yeah, 447.30. Okay, guys, hold on 1 second. 447.30. Got it. And even as a trader in this market, you got to be Jack, be nimble, Jack, be quick.
Yeah, 100%.
I got it, guys. 447.70. Sorry. Okay, good. Got it. You know, when we see the market just getting absolutely crushed like this, it's time to not buy anything maybe short term, right? Let's just go down to the limited to the pivot point, guys, okay? Sometimes the best trades, guys and girls, are no trades. And when the market's doing crazy shit like this, sometimes it's best to just sit back and do nothing.
Yeah, I mean, this is so opposite.
You sound perplexed.
Well, yes, I am. I'm sitting here looking at a bunch of different things, trying to understand what exactly is different about today that was not true yesterday or the day before. And maybe that's my first mistake, is trying to understand it rather than just taking it for at face value, which I should be doing. Part of it I can't help myself, but
the market that we're in, we just have to react rather than try to figure out what's going on.
Yeah.
That's the
So
bottom line.
I'm really just trying to make sure it's a little bit tricky up here because
Look at the spies guy. We're getting crushed now.
I only have my one screen here, but I'm just trying to keep get a handle on the movements here and what the different sectors are doing and
everything's coming in right now. There's no we ain't playing any favorites right now. The whole market's coming in pretty good here right now. So
I wonder if this will be good news though for your Lockheeds, your Chevrons, your stocks that have been doing well. If people are trying to find whatever out there is strength, or if everyone's just selling everything, not buying anything.
Right now, they're throwing the baby out with the bathwater. That's exactly
okay. So no one's looking for the strength right now.
No, you can't. I mean, look what Limited just did, right? We got stopped out on that trade because it ripped right through everything. I mean, the short.
So should we get some? Should we get some quick puts?
All right. I think it's a little bit late for that.
Quick puts now. Yeah, it's definitely late for that.
Wow. IWM now down 2%. SPY now down 1.5%. So what's dragging it? I mean, everything just sort of turned here. So what's holding up is
I'll go to my good friend Walter Bloomberg.
Your energy is a story here. I mean, energy and I guess real estate is holding up here. But
all right, good, Drew. No, I don't see anything that's holding. Let's look at the financials. See what's going on with them. J.P. Morgan, Goldman Sachs. I mean, this is just a crusher across the board.
Yeah, Jesus.
It is a crusher across the board right now. So there is nothing holding up. What's AMD doing? AMD's kind of hanging right now. Yeah, Adam, if you're at max, just don't do anything anymore, okay? I think we're going to get a bounce somewhere around here, guys. Yeah, exactly. I think we're just getting a little bit oversold here now, guys and girls. Let's see if the spiders bounce a little bit from here. I think they're going to. Where does our Limited do now? Yeah, Limited's trying to bounce back above the 30-minute. Well, nothing's really setting up for a trade, I can tell you that. Everything's kind of just sitting in the middle now.
Yeah, and everyone who's trying to look for specific like trying to think about their stocks, in a vacuum, don't do that, right? Like everything is going to move together here. Like someone in the chat just asked about Vertiv VR. Yeah, Umar asked about VR TV. I mean, I'll bring up the chart here. I don't know. There was probably news today. Oh yeah, they had earnings, so there's news today. Cool, but look what happened. Look what just happened in the last 15 minutes, 20 minutes, right? Well, no, last hour more or less. So it's moving now.
$7, but it was
right. So I'm saying we are still at the mercy of the next headline. So in this case, it appears that the headline was someone that came out of Russia that they're threatening highly specific strikes. I thought that was known. So
yeah, I don't know. I mean, I guess there's still been a negative reaction to the fact that they're taking Kyiv or trying to take Kyiv. So I thought that was what
I just saw. This unrelated to what we're talking about, but I just saw that GM sold their Lordstown Motors stake.
Oh wow!
Listen, here's the bottom line, guys.
Sorry.
Okay, this is the time to be sitting on our hands. Let things settle out. If we go to the spies, right? Let's just go to the spies now. Okay, let's see where we are. Daily, we're a mess. All right, we pushed right against resistance on that big rally, guys. When we went from here to 439, that was resistance, right? So now we're sitting at 430, and there's just nothing here. Weekly, our first support, which we busted through a couple of times, is 423. So this is the time that you have to look and see if we get any far from moving average trades setting up in any of the stocks that we're looking at. If we look at the Limited, again, and this is going to happen too. It went way below it. Now it's kind of holding that level and it bounced back up. This is where we look for things to, spies, again, we're in the middle. We have no RSI in the spiders. Here's the bottom line. You don't try to figure out what the hell's going on now. You just look for trades to set up. Just getting here. What's the deal with David's hair? This is what my hair always looks like. I know, Kenny. It's very, very frustrating, right? But how much of a stop did you have there, right? I mean, it held our 30-minute EMA, and now it's up $1.20 from there. So I think we're going to get a little bounce in everything from here right now. Anyone who thinks they can tell us what this market is going to do from day to day, it just doesn't work right now. Right? Tesla had a beautiful move off its lows, and now we're kind of just giving back a little bit. Tesla went down to what? I mean, the whole market looked like this. 700 Tesla was, and it's now $863. Crazy. Palantir is holding up. Palantir is holding up at $12. I don't think you have, Palantir is probably okay to hold a little bit here long term now. Spence, are you in this Palantir?
No.
I am not either. It's one of our most asked about stocks from the audience, though.
You know why? Because didn't Kathy Wood get out of her entire position in this?
Yeah, she did.
Yeah, so that was probably a good time to buy it right after she announced that.
Yeah, there actually was the argument that, okay, now that selling pressure is gone and maybe the stock can run from here, but
exactly. That's the theory anyway.
Exactly.
We'll see what happens. So Ken, do you want to change the whole thing that we do and use the ATR for stops? Is that what you're saying?
Check. Make sure y'all can hear me. All right, I banged my desk and dislodged my microphone.
Well, no, I don't want you to change what you do. If it's something that we should all put into place, we'll do it. We're a team here.
No, I'm not in Palantir, to answer your question, Dave.
All right, good. I'm looking at SoFi.
I was in it for a swing. Got out right when shit hit the fan.
All right, Lou. That's good. SoFi, I'm looking if we get to 10 or lower, guys, I will start a little trade in SoFi again. We're not in anything right now. Yeah, I like it 10 and lower in SoFi, but it's going to take a long time for that thing to get going again, I think. I don't listen to the prophets of doom in the 80s. People are doing nuclear drills. Guys, look, the bottom line is, when this all settles in, yeah, we're going to be fine. It's just how much damage is going to come between now and then. That's the whole thing, right? Everything that's ever happened in our history has passed. We know that, right? But again, to me, the only thing you can do in this market right now is trade. You can't have even a 1 or a 2 day time horizon, because when you do that, it's a recipe for disaster, in my opinion, anyway. Jets is down 5%, airlines. All right. Yeah, so what are they going to start talking about now? That people aren't going to want to fly anymore because they're afraid to fly? Is that what the next thing's going to be?
Or the theories that with oil prices rising, that airlines are going to have more expenses. Yeah. Then they just make the tickets more expensive. I don't know. We'll see.
Interestingly enough, though, crypto's
been great, right?
I think holding up here.
It's had a little turn now, but it's been it's had a huge bounce off the lows.
I wouldn't know because my crypto charts are having a seizure right now. But
all right, let's take a look. Look at this chart.
Okay,
everybody in the room.
Thank you.
Look at this chart and look at exactly the resistance that it hit on our 200 EMA. This is today, guys. Right? It exactly went to whatever this is, 45,000, 71. And look at it, exactly hit that, and it could not get above that, and we've gone down 2,000 points from here. I mean, the technical analysis, even in Bitcoin, and don't lie. If look what happened the first time we went up here. Smackdown. Second time we went up there. Smackdown. But it has been better than most everything else that is going on in the market. And, everybody was calling for this thing to go back to 19 or 20,000, and I don't see that happening anytime soon in Bitcoin. But it does respond to the technicals just like everything else does. We have enough oil in America. Yeah, I agree with that too. But look, guys, we are getting absolutely crushed in the Spider-Mans now. So here's what we'll look for in spiders, guys. Okay. Right now we have a 27 RSI, which is low for the SPYs. But if we get around 20, that'll be a spot to start buying a little bit of this for a trade. And let's see if we have any support anywhere on any other chart. 15, we got nothing. 30, we got nothing. 1 hour. Nah, we're in nowhere's land. So the only way we can trade this now is if we get to what we call a far from moving average trade, and it gets really spiked down far away from the closest moving average, and the relative strength gets down to about 20. That's a spot that we were still looking at. Guys in the room, is anything else happening? You see anything else setting up?
How's
AMD's
limited
going
looking?
down. Limited held the trends, basically. All right, so if you look at limited, it basically held that 30-minute trend line.
Okay.
It went down a little bit below it, and now we're kind of just sitting in the middle of everything. So, if we break this 30 at 448.60, maybe we can get down to 443. And if we get back above the two trend lines here, 450.55, we'll probably start heading up. Again, this was a little longer term one that we looked at because of the relative strength and how stretched out it was.
Yeah, it just got a little extended.
Yeah, when something's 55 points above the moving average and you have an 80 relative strength, and actually it's like 83 here, you can expect the spot to pull back over the next day or so. And it started to happen today. Ethereum, what's EHTH?
No, EHTH is a stock.
Yeah, I don't know what that is.
That's eHealth. That's oh boy. Yeah, whenever that truck gets brought up, it's always
not a fun conversation.
Not a great one to bring up.
This is down from $80.
Here, let's just take a look at what's doing in a lot of the earnings stocks here. So Zoom.
Let's take a look.
Zoom had earnings overnight. Oh, what a pop off the open! Who's chasing Zoom up?
Yeah, look at this. Right, 9:30. We were at 126. We spiked up $10 after the opening. And
but then actually, part of me doesn't blame them because that's the market that we've been in for the last 3 days. I can't blame you for chasing Zoom up there because.
Especially,
Zoom's been on a really good. Zoom's had a great run for the last 3 days.
Right, and some people were expecting down from $560 to get a nice pop out of that, right? So I don't blame them for chasing it up this morning either.
Yeah,
down 450 points or whatever it is.
Well, yeah.
So you think it's going to recover a little bit of it, and boom, here you are. It's down $11 from there.
All right.
I mean,
the Qs are still getting smacked.
Interesting that retail. Target's holding up, and Kohl's is not at all. Kohl's is giving back.
Target had earnings, right?
Yeah, so did Kohl's. Kohl's now gave back all its earnings gains here, just about. Target is holding up very nicely today. What about
even that one's $9 off its highs, though. Target.
Wow.
At the moment.
Beggars can't be choosers, David.
No, I hear you. Look at Kohl's. Kohl's is giving every bit of it up.
Yeah.
And it looks like it's heading even further down, right?
Yeah.
Again, as a trader, this is a time to just be sitting on your hands right now. I mean, there is nothing technically telling us to do anything right now.
Wait, Christopher, I'll have you know that I went to Kohl's on Saturday or Sunday, one of those days, whatever, and I was there for probably 45 minutes, but I didn't buy anything, so maybe that's the point.
What, everyone's going window shopping in Kohl's now?
I mean, I went trying to buy some new shoes, and I ended up not buying anything because they didn't really have a lot, but what else?
Oh, you know what? Let's talk about a couple of levels in the spiders as far as the
yes, let's do that.
Daily is concerned, right? While we're sitting here and not doing anything, so we have to go to the weekly chart, and the first big support is going to be around that 423 now. That's going to be our first big support. If we get below that, we can see new lows again. I don't think we're getting to this level, guys, but 354 would be about a 30% pullback from the high. And that would be a spot that I'd be a big investor back in everything again. I mean, that's a long way from here. But look, I'm looking at my weekly chart. That's the technicals.
What level was that again?
354. I mean,
oh, boy.
Yeah.
354.
That's so long.
I'm going by my technicals. That is our weekly support level on the spiders. That would be down about 20, 26,
David,
30% from the high. What?
Give us some better news.
354?
Yep.
In the SPY?
Yep.
The last time we
David, that's like 70 points. It's like 80 points away.
Correct. I mean, we were there in, let's see, right here. So we were there in November of 2020. It's not that awful. It's almost a little more than a year.
It's 2 years.
David, do you have any level that's more relevant than that? I mean, 354.
Nope. I got nothing. That's more relevant.
Wait, so what does that mean? To be clear, does that mean you're buying above at any point above 354?
No, that means I'll be look, I haven't been in the market for a while. I'll be back into the market with everything I got if we get down to the 354 level. That's what it means to me.
All right.
Look, guys, anything is possible in this market. I mean, last week everyone was calling for 400 in the spies. All the experts on whatever they were.
Wait. When is the last time we were at 354?
November 2020.
November of 2020.
November 2020? Holy moly. All right. I mean, that's an awful long ways away.
Well, did anyone ever think we'd be at 218 when the pandemic hit? Because that's
certainly not. And look,
there's a lot of crap going on now, right?
I understand it.
Guys, I'm not saying it's going to get there. I pray to God that it doesn't, right? We all have.
That's just his level. Come on, guys. That's just his level.
I'm not telling you guys it's going to get there, okay? But if it does get there, you heard it here first. Check. No, I'm not shorting everything, guys. No, I'm a trader.
What about okay? So we've been talking about how this market's been for traders. That you got to be in and out. You can't be, looking at stuff on even a 1 or 2 day time horizon. So how would you, because we're not going to have the pleasure of having you with us all day. When you leave us, how are you going to play this the rest of the day? If we get a bounce on SPY, are you going to look to short that? Or are you going to look to play that long? I mean, what are you going to be looking at to determine your outlook for the rest of the day?
Yeah, I will definitely be looking to short the spiders on a trend, okay? So we're sitting right here around 429.50, right? Showed us it wants to be in a downtrend. So if we rally up to some of our trend lines above where we are in the spiders right now, I will be looking to short for the rest of today anyway. And again, the only time I'll buy spiders is if we get a really big spike down. We get the relative strength around 20, and then I will buy it for a trade, right? And again, you know what? I could change my mind 20 minutes from now, but right now everything is setting up in a downtrend. Everything that we're looking
at. I mean, we haven't gotten even close to a bounce the last hour. It's just been moving straight down.
Look at AMD, look at Nvidia, right? There hasn't even been attempt for a bounce since we got on. Literally,
although they haven't been free falling. They've seemed to have slowed the bleeding somewhat.
The pace has slowed. Yes.
The pace has slowed. The tourniquet is on right now.
It still does not look good in any way. But we've seen this in the markets too over the last 3 weeks, right? We've seen when they've looked at the day we opened down 1,100 points, guys. Did anyone think that the market was going to close up that day? We were open down 1,100 points, right? And the market closed up that day. That was, if we look at the SPYs, that was what we call capitulation. And that was a morning where we were buying a lot of stuff when this happened, this day.
So we don't have a specific news headline.
That's what I've been doing for the last half hour, Aaron.
Because I see from Walter Bloomberg, Ukraine Foreign Ministry says Russian attack on Kyiv TV tower was near. It just sounds like Russia's invading Kyiv.
It's more of the same. It's more of the same.
We knew that was happening.
Yeah.
Right?
Yes.
But guys, have we needed any kind of news to have all this that's happened in the last? I don't know. Go back 10 days, right?
Okay.
We haven't had anything specific other than what's going on already. The market just cannot stand uncertainty, right? You can tell us that we're going to war with Russia and we're moving in, and the market will probably still go up from there.
Okay,
but nobody has any clue what's going on right now.
Let's talk about let's play out this scenario a little bit. So let's just play out the scenario of what happens if the last half hour is really just a sign of more to come, and the market decides, oh yeah, I don't know why we went up for 3 straight days, but we're not going to do that anymore. So let's play that out here. You have all these tech stocks that have rallied in the last 3 days. All the QQQs, right? Kathy Wood, ARKK, whatever.
Tesla,
everything.
Yes. Oh, look at Asana's green today, by the way.
Okay, yeah, you know why? Because someone CEO is buying the whole company back. Let's play this out now. You've got a situation where you've had your people maybe sitting on some gains in the last 3 days. How do you approach this, David? Let's say you're long on one of these. I don't know, any EV stock that's rallied hard in the last 3 days. What do you do here?
Well, first of all, we're not. But second, give me a stock and let's talk about it.
Okay, fine. Tesla.
Let's talk about Tesla. All right. So let's say you're caught in Tesla, right? You bought it wherever it was. I don't know. Are you losing money in it? Let's talk about that. Did you grab it up here at the 860 or whatever it is, the 830, the 840. Again, the bottom line is we don't know, but you could see that whenever Tesla has these extreme moves down, you're going to get a big giant bounce on it. So my advice would be, if you're in Tesla, you buy every time you see one of these things happen. You cost average into the stock, and then you're going to see these giant moves up in it. That's just the way it's going to be.
I meant okay, but what about anyone who's in this thing for a trade? Like, what if you're in Tesla from Thursday or Wednesday?
Well, you're not. You're an idiot if you're in Tesla from Wednesday to Thursday. And
you're up money. You're up money.
Right. Well, that's what I'm saying. How do you not? If you're in Tesla from anywhere down here at 720, 730, 740, all right,
maybe I picked
it by 860, you're an idiot. And then if it goes back down to 700, you deserve whatever you get. That's what trading is, right? If you were lucky enough. And here's the game that's set up beautifully for Tesla. We're already down 4 days in a row.
All right, I have a better example. Okay. I'm sorry. Can you pull up CCJ?
Yep.
This is a uranium play. Okay, huge rally since Thursday.
Yep.
Okay.
Okay.
So now what? Now you're down. Your first red day in 4 days now.
Right.
Is so far at least. Days young. Again, for someone who's long CCJ, maybe for not for a long-term thing, what's the level here? What's the stop? What's the play?
All right, where are you long? That's the whole thing, Spence. It's a $20 stock.
Playing out a hypothetical scenario. I am not long.
Let's say we jumped in the stock when it first broke out at $22, right?
Yeah.
Right here.
Yes. Great. A breakout trade. Beautiful. Love it.
Right. Perfect. There's a breakout trade. This is a $20 stock. Okay. When you make $2 on a $20 stock, you're out, you're done, and that's it. Here's the thing. You can't expect this stock to keep going, a $20 stock to have 1 day, 2 day, 3 days, and keep going up from that. It just doesn't happen. So if I'm in at $20 and I make 10% on the trade, I'm done. I look for a pullback now. Maybe it pulls back to the same levels where I got in, and I get back into the trade.
Okay, beautiful.
So any of these stocks that we're looking at, when they have a 3-day thing like this, I mean, look at Limited. Okay? It's doing the same thing right now. This is day 1. This is day 2. This is day 3. We got the RSI. It's just not going to keep going like that. And, we're $7 off the high already. It's the same thing in a $20 stock that's gone up $3. It's the same exact thing. If you're a trader and you get in these things at good prices, like a Tesla or whatever it is, it's silly not to take profits in these things. Look, if the market get crushed again, right? Why can't Tesla go back to 700 again? Great.
What's something like? Well,
let's get back in.
What's something like Apple's RSI right now? I mean, we just saw Lockheed's above 80. I'd venture to say Apple's is at like 30, 35?
On a daily? Yeah, it's 40.
40?
But again, look at Apple here, guys. This was the trade. It's set up for us. This set up for a swing trade. Down 1 day, down 2 days, down 3 days, down 4 days. The 5th day, it hit a support level on our 200 EMA at 153. It made a low of 152. Here's your trade. It went up 15 points in 3 days. There's your trade. And we had a technical reason to get in it after being down 5 days and hit our 200 EMA on a daily chart, right? And it gave you a 10-point trade in 2 days. This is what we look for. But to think you're going to buy it here and then stay in it till it goes back to new highs, if you're a trader, that's not what traders do. We bought it on support, you sell it on resistance. There's your nice, beautiful trade.
So
and
are you?
Go ahead.
Would you be interested in Apple if it bounces back down to that previous support level?
Nope, because chances are, if something hits the same support level twice, it's going to go through it. And we have a weekly in this down at the 144 level, which is where, again, I'm a big buyer in Apple if we ever get down to the 144 level. If the market gets bad enough, Apple's going to 144, okay? The market would have to be substantially lower from here, but look at the technical, guys. And again, everything I do is based on technicals. It went down from 180 to 150, and it held the technical level. Perfect. Okay? Now, if we go from where we are to 144, there'll be a very good chance, a 90% chance, and everything we do is about the odds, that it's going to bounce off that level, certainly for a trade. For Apple to get to 103, guys, okay, the spiders are going to have to hit that 350 level that I talked about. Is it impossible? No, it's not impossible. It can hit that if the market gets bad enough. Would that be a great place to pile into Apple for a long-term investor? You bet your ass it will be. The one thing I've learned after doing this for 35 years, guys, is that anything can happen at any time. And I'm not smart enough to know when a stock is going to stop going up or stop going down. I'm just not. I use my technical analysis when it tells me to get into the trades. If the trades don't work, I get out of the trades with stop orders. That's it. If I'm looking to get into something on long term, I'll go to a daily and a weekly chart, and I'll start picking at it when those charts tell me to pick at. And in companies that I believe in, that I know are going to be around for a long time, and that's how I go about my business. That's it.
Awesome.
Look at the SPYs now. If at any point you thought these spiders were going to bounce, you were wrong, right? Any point you thought the spiders were, it's just not a trade, guys. It's not a trade. If we get the relative strength down a little bit more, maybe we can get a far from moving average trade and we'll get a little relief bounce. Okay? What are you guys trading? Hold on one second, guys.
Aaron, we haven't even gotten to like the theme of the day. Microsoft versus Apple.
I'm aware.
We haven't even talked about it. Well, we're going to have to go in a second because our next guest is going to come on in 2 minutes here. But fast market, everyone. This is what happens. Fast
if you're a
market.
trader, look for technical levels. Get in, get out, take your trades, move on to the next trade, and don't have an opinion. That's it.
Don't have an opinion. David Green coming to us live from.
I'll fix my hair for next time.
I
we
kind of
like
say
it.
I like. I'm gonna go with I like it. So it was just unexpected, but I dig it. I dig it, David.
I got you at the beginning, right?
Yeah, you did get me. I was like, that's not David. It can't be. David Green joins us every Tuesday. David, always a pleasure, man. Have a good one.
Thank you, guys. Thanks for having me.
All right. Wow, fast market, everyone. Holy moly. What is happening out there? I'm keeping an eye on the commodities, Aaron. By the way, we should mention that every commodity under the sun is green today. Somebody find me a commodity that's not green today.
Orange juice.
I don't know what the symbol is for orange juice.
Coffee.
And also, we don't have orange juice futures in pro. Coffee, green.
Wheat.
Wheat, very green.
I don't gotta ask oil. I know that's green.
Every commodity is up. It's
Onions.
does onions still trade?
Yeah, you can look at onions futures.
Yeah, I don't know what the ticker is for that either. So I don't know what the ticker is for any of these commodities, honestly. But natty gas up for 5%. Gold, metals, gold, silver, crude. Obviously, you guys know that. Corn, wheat. I mean, I brought up a broad-based ETF here, but on the screen. But I mean, commodities is the place to hide. I don't know. It's moving so quickly. I don't know. It's moving so fast. Thank you, Shelly. Shelly says cattle, OJ, and cocoa were not green today.
Ha! I knew OJ.
Okay, I don't know what this. I don't even know how to find orange juice quotes. Okay, I'm sure I can find them on Thinkorswim, but I don't have that open right now, so I'm not going to do that. All right, let's stick with this subject though. Well, not the commodities, but more so just like the
Why commodities are up?
Yeah, let's stick with the Ukraine-Russia war situation happening here. Let's bring on Matthew Zimmer, who is the Director of Governance Research at Newday Impact Investing. Matt is interesting. It's a great day to have him on. An interesting a guy for a few reasons, one of which is that he is a native. He was born in Ukraine. So I'm sure he has thoughts and opinions on this just from a personal standpoint. But Matt is, advises clients on impact investing. And that term has, for a while, maybe has been a bit of a loaded term, but has a whole new meaning now. So let's give Matt our special intro and bring him on the show right now. Matthew Zimmer from Newday. Where's our special intro? There it is. Matthew Zimmer, welcome to the show. How are we doing?
Great. Thanks for having me. I'm actually was not born in Ukraine. I was in the Peace Corps in Ukraine in 95 and 97. My wife is Ukrainian.
I received bad intel.
We got some of that information.
Bad information, Matt. I apologize.
That's okay. I'm glad to be an honorary Ukrainian.
Okay, so just to be clear, you're not there now, right?
No, I was over
Okay.
there over the Christmas holidays for a couple of weeks,
Oh,
visiting my
wow.
wife's family.
Wow.
Before it really got bad.
Wow.
Yeah, how are
Wow.
things over there while you were there just a few months ago?
Oh, it was that was my first time back since the pandemic. So it had been a couple of years, and my wife's family lives in central Ukraine in Cherkasy, and it was great. The stores were open. Didn't look like a lot of COVID lockdowns or anything like that, and stores were full. People were about. It was a nice time. People weren't too concerned at that point about the invasion, even though there had already been talk about the buildup and everything. But yeah,
Right.
we had a nice trip. It was uneventful. It was only recently that it's really gotten bad. Yeah.
All right, so let's talk about your job basically is to advise companies on and or not so much companies, investors on impact investing, right? And how to do good with their money. I would love to get your thoughts on how this conflict and the escalation of it has changed the nature of that, has changed the nature of impact investing, because we've seen, there's pressure on firms like MSCI to take Russia out of their indexes, and there's all sorts of implications here just from an impact investing point of view.
Yeah, I saw that about the MSCI. I think that's likely going to happen. And also, Russia was taken out of some of the fixed income indexes as well. I think a lot of companies have said they're going to be divesting out of Russia. I saw BP, Shell, Exxon.
Yep.
The list goes on. I think a lot of companies are going to look at the reputational risk of being involved with the country that's invading another sovereign country, and there's going to be a lot of similar companies making the same kinds of moves.
So wait, so let's talk about, let's just say, hey, me, Spencer, I decide right now I don't want to have any exposure, or let's say as little exposure to Russia as I possibly can. What sort of ways might I have exposure without realizing it?
Well, Russia is on top of being a major oil exporter, it also has a ton of different commodities that it produces: titanium, neon gas for computer chips. So there's a whole range of palladium for catalytic converters, wheat for food production. So to the extent that companies are using those different commodities, they're impacted by the war in Ukraine.
So how would I go about trying to minimize my own exposure here?
Well,
In a way that's possible.
I don't know that you can really completely insulate yourself from the impacts of global commodity markets. I heard you guys talking earlier about how commodities are all going off the roof, and to the extent those are inputs for companies, it's hard to really completely isolate yourself. As far as direct Russian investments, you have Russia itself is barring people from selling securities, and the investability of Russia itself for direct investment is basically nothing now. It's going bonds, everything is really shut down. You can't really trade anything there.
And that's adding a whole other wrinkle to this, because there are people that are trading Russian-based equities in the U.S. Those equities are tied to stocks in Russia that are frozen.
Yeah.
And it's creating this crazy situation right now where you're trading something off of a frozen market. There's no fair value off a frozen market. We don't know. So
I think a number of them have been delisted. Some of the companies I saw from the London Stock Exchange, they were taking some out, and some of those, like the large Russian bank VTB, has been under sanctions. Subir Bank as well, their largest bank, is being sanctioned. I saw Subir Bank, I think, had dropped 70%, and the European regulator said it was in likelihood of failing.
Can you maybe you can explain a little bit, Matthew, if we could just zoom out for a second in terms of like impact investing and as I set off top, it's a bit of a loaded term because the biggest criticism of impact or ESG investing is that there's no agreed upon definition and there's no agreed upon rating or criteria for everyone. But and I know there are questions about whether it actually drives returns or not. But in terms of the overall thesis, it's hard to disagree with the idea of it as being a good thing. Can you explain like sort of where Russia fits into the like? Do you have a rating system, or do you have a way that you quantify what market or what country is or is not good?
Yeah, we do. I maintain an index of country governance factors, and we look at a range of issues like their regulatory structures, whether they have money laundering problems, issues with corporate governance, their securities regulation. And Russia has been one of the lowest ranked countries in our index. It ranks around 40 out of the countries that we monitor. So it's near the bottom of our list of countries.
Who else is down there out of curiosity?
Well, China is another one that's near the bottom. Egypt, some of you could probably guess some of the countries that would be down there.
Well, no. That's
Saudi
why I'm asking. 'Cause I just don't know. So China, I would assume. I wouldn't have assumed necessarily Egypt. I mean,
I'd guess Saudi Arabia.
Maybe Saudi Arabia. But like,
Arabia,
where do you draw the line though? Because not all these like.
What about the U.S.? Where does the U.S. rank on there?
The U.S. is in the top 20. It's not at the very top, but it's fairly well ranked for our index.
Are you ranking like all countries, or are you drawing the line at like developed, like emerging markets, or
emerging markets, developed, the large investable countries?
That's what I was wondering, because it's like it wouldn't make sense to rank like Afghanistan. That's not like an investable country, right? So
they have to at least have a government to get a governance ranking.
There we go. So like what is the implication of a rating like that, like for Russia, and saying, hey, they're near the bottom of the list? What is the implication there?
Well, I think it really, when you're looking at, you talk about ESG, the G is governance, right? And so when you're thinking about what you're impact investing and doing well, it's good to invest in countries that have good governance, and that redounds to being able to have predictability and be able to get your money back out again.
Being able to get in but not being able to get out. Yeah,
I think that's going to happen now with Russia. They made an announcement today that foreign investors weren't going to be able to sell their assets, and so the reputational damage from this, even after the crisis passes on Russia, is going to take a long time to resolve.
Are there any ways to trade based? Do you license your index at all to anyone? Any providers? Any way to trade off this?
We do have some. We do have the opportunity for people to use our index if they want to invest with the weightings that we have. The way we've usually done it is to take something like the MSCI index, and rather than, that's a market weighted index, and instead weighted based on these governance factors to give a better picture of the true value of the countries.
So what other factors go into that again?
Well, we're looking at things like banking supervision, their banking supervision practices, their fiscal transparency, their insolvency practices.
Okay. But is there anything outside of banking, or?
Well, it's mainly looking at their overall banking and other factors, but we're looking at also like corruption, whether the level of corruption in the country.
What? How much movement is there? Like how likely is it that, like, let's just pretend, best case scenario, conflict, ceasefire today, everyone goes back to their corners, and dealing with the fallout of that. What are the chances, if that were to happen, that Russia, moves up this list at all? I'm just
Well,
wondering.
I would say that there's a lot of fundamental factors, like a country's regulatory structure doesn't change overnight, and so there's a lot of stability with a good number of the factors, but we do see changes over time. It's not necessarily like something that's going to change hour by hour. Let's put it like that.
Sure. So, but like change what, quarter by quarter or year by
Quarter
year?
by quarter is how we typically look at the rebalancing. Yes.
Okay. Awesome. All right, Matthew Zimmer, Director of Governance Research at Newday Impact Investing. Matt, thanks for coming on today and giving us this perspective on investing in Russia right now, because it's tricky.
Appreciate it. Glad to have the opportunity.
All right, thanks a lot, Matt. Oh, and I cut him off. I'm sorry, Matt. That was an accident. It's 12:27, so here's the plan here. We're going to have Robert Roy from Trade Like a Boss on at 12:45, and then we're also going to have at 1:30 Erez Raphael, the CEO of Dario. They announced a deal today with Sanofi, I believe, was their partnership they entered. Yeah, it was Sanofi. So we'll talk to him about that at 1:30, so about an hour from now. In the meantime, Aaron, we haven't even gotten to the topic of the show, which you decided to call Apple versus Microsoft. Care to enlighten us?
Yes. So it's no secret. Let me go ahead and pull up my Benzinga Pro. I've got NVIDIA pulled up right now, but let me go ahead and switch that to Apple. So Apple and Microsoft were officially out of, at least in terms of big tech names, earnings season. Apple and Microsoft both reported great quarters about a month ago, but trading well off of their highs. If you recall, a few, sorry, I don't know why I'm on a 5-minute. Let me get to the daily. If you recall, a few, this was like, what, a month ago at this point? A little more, 2 months ago. When Apple was at its highs, Apple became the first $3 trillion publicly traded company in the world. And since then, Apple hasn't really done much. It came all the way down from about 183 down to around 160, came back up to 175, came back down to 160, and is now hanging around 164. So the question is, for the long term, not for a trade, but for the long term, would you rather own Microsoft, who also got to all-time highs around the same time Apple did two months ago at the beginning of January, $340, currently sitting right below $300. So this is the debate: Apple versus Microsoft. I went out and we did some research on this topic. There's an analyst at JP Morgan who also analyzed this recently. And let me go ahead and pull that report up if you want to give me a second. But
okay, I'll give you a second. Well, while you do that, I will chime in. I just did a quick look, and just to compare one of the best uses of financial ratios is for this exact thing, is to compare like companies to each other. So comparing Apple to Microsoft is a totally fair thing to use the price to earnings for, or the price to sales for, or any ratio, right? EV to EBITDA or tangible book, whatever, tangible book value. You should use those to compare. It's like comparing apples to apples, right?
Ooh, I see what you did there.
So,
and yeah, Blessing, sorry, I don't know how to pronounce that name. To be honest, I will own both. To be honest, I will too. And anyone who owns broad-based indices will own both. The question, this is just a debate, a practice for fun, to say if you had to hold one.
If I had to pick one.
If you had to hold one. And what does your PE say?
If I had to pick one, I'm picking this one.
Microsoft? Tesla?
This guy. Just kidding. No, I'm not.
I would not pick Tesla over Microsoft. And
all right, now I dropped it. Damn it.
God damn it.
No, so what I was going to say was Apple, if you compare it to Microsoft, Apple has a lower price to earnings, which means it's cheaper, right? You're paying less money to get access to Apple's earnings than you are for Microsoft's earnings. Apple's PE or forward PE is 27, Microsoft's is 32. And the price of sales is lower as well, right? Apple's price of sales is, I think, what did I say, 7? Microsoft's is 12. So you're paying less money compared to the amount of money coming in the front door of those two companies. You're paying less money for Apple than you are for Microsoft. So
Yeah, so let us know in the chat which one you would rather take and why. Give us just a quick sentence, reason why you prefer Apple over Microsoft or why you prefer Microsoft over Apple. Personally, I'm picking Apple here, and
yeah, me too.
I'm going with history, right? I mean, historically, Apple has just recovered very nicely from every single dip that it's had. It doesn't matter what's going on, whether it's the '08 crisis, whether it's COVID, whether it's
Well, so is Microsoft.
the prospect of World War III. I don't know. There was a time where Microsoft was, and I'm going way back here, Spencer. I'm talking about like from about 2010 to 2013, Microsoft did not perform as well as Apple.
Well, it hasn't performed as Apple for a long time, but it has come back from all of its...
It's yes. Okay, in that sense, yes. But if you look at certain times, remind me what's Microsoft's CEO's name?
Satya Nadella, right?
Nadella, yeah. Well, ever since he came in, when did he come in?
2015? I think when he came in.
But before that, like the 3 years before he came in, was Bill Gates still?
No, it was Steve Ballmer. He was CEO for 15 years. Steve Ballmer was the worst thing that ever happened to Microsoft stock, and when he left, it was the best thing that ever happened because
Nadella's been an absolute monster.
Because Steve Ballmer, if you look at Microsoft when Ballmer was CEO, here this is always a fun exercise. I think he was CEO when like 99 to like 2015. So if you just go look at Microsoft stock, and just go let's go back. Let's go look at 99 to. We'll have to zoom out a little bit, but you can actually see the point where Ballmer left. It was like this is a weekly chart, by the way, but Ballmer left like God, I think it was like this. I think right there. So like all this underperformance for 15 years was Steve Ballmer at the helm, and then they hire Satya Nadella. He goes all in on cloud, and bada bing, bada boom, we are where we are. So,
Jay Rice is saying Apple big risk is if China does anything with Taiwan. TSM is a big Apple.
It's true. Big Apple supplier. It's true.
Speaking of TSM's actually was having a good day today before the sell-off, and I do want to go over to the broad-based markets again.
Wait, can we just acknowledge this chart though? This is Apple versus Microsoft.
Yeah, I mean it's insane. Apple's been the best stock of all time.
Microsoft hasn't been too shabby in the last 7 years.
Not at all.
It's been a month.
Kyle, I don't know if he's stating or if he's asking if we're at the bottom of the day. But I do.
Have some fun.
Yeah, I like this. I'll let you finish, then I'll go back to the broad market.
Timeline is everything. I just arbitrarily went back 20 years and can tell you Apple crushed Microsoft, but you go back to 2015 and it's Microsoft is winning. So, it's just it's arbitrary timelines, but I'll pick Apple. Personally, that's my take. What are you going to say about Taiwan Semi?
Well, Taiwan Semi was just Taiwan Semi's been having a really tough go the past couple weeks. It went from all the way 145. It's drawn down like 30% from its highs.
What? I'm looking at the wrong chart. I was like, what? No, it's not. But I did TSEM, not TSM.
It's drawn down.
Better.
It's drawn down like 30% from its highs just a couple weeks ago in mid-January, about 6 weeks ago. But today was having a nice day, especially against other chip stocks. So if you're looking at NVIDIA, you're looking at AMD. But here, Spencer, I'm going to go ahead and steal the screen back because I wanted to address Kyle now again. I don't know if he's stating this or asking it, but he's saying, I pulled it the wrong. He said bottom for the day. So here's what I would say is look at, I'm just going to pull up the cues for this. I'm going to go to a 5-minute chart, and we'll be able to see kind of what happened here, where we got down to. Let me get my zooms in real quick. Zoomy. Zoomy. So we came all the way down to 341. We're only about a buck higher than that right now. If we come back down here and break that, I'd be looking to buy some puts because not only would I expect the Qs to continue moving lower, but you'll see that VIX continue to climb, causing a double. The contracts will increase in value while the price is moving in your direction. So if we break that Qs, I'd be looking to buy some puts. Now, if we get down there and we bounce from there, or if we never get back down there, then it is very likely that we've seen the bottom of the day so far. I don't know what's going to happen. I'm watching this Qs chart. Looks like we're heading back down that way now. What I will say is, at least going off of what we've seen the past couple of weeks, I'm not putting a rally at the end of the day out of question. I think it'd be silly to do so with what we've seen. So basically, Spencer, to TLDR, if we get back to this level we just saw at the Qs about 30 minutes ago, and we bounce from there, I'd see that pretty bullish. If we fall through that, I'd be looking to buy some puts.
I don't know. I was literally about to come on today's show and
Admit that.
throw my hand up and say, all right, I mean, you got to be able to change your mind and admit you're wrong. And on a Thursday and Friday, I was like, I don't know how you can buy stocks here for anything other than a long-term investment. And I was going to come out and say, yes, I was wrong. Sorry. I mean, clearly you need to buy the dip. Now, is this just another dip to buy? I don't know. But like, just when I was about to throw in the towel, we get some negative price action in my favor. So now I'm even more confused.
Also, we do.
I think this is the play. Honestly, the convenient thing about Thursday's market, we opened way lower on Thursday. The convenient thing is that gives you an out now on anything. If you want to give yourself some breathing room, like, on the Qs, for example, Qs are at 342, and we're talking about 30 points, which is a long time. It's a lot of money to lose on a trade. But if you want to give yourself some breathing room, you clearly have levels for obvious stops, right? You can stop yourself out at yesterday's low, at Friday's low, at Thursday's low, right? So that's the good part, is you have a convenient stop loss level across the board for anything that's rallied here.
And I do see, while I'm looking at the Qs to see if we get back down to that bottom that we had about 30 minutes ago, I did notice NVIDIA drop below its levels. So this will be one to watch, that it might kind of act before the Qs do. But if we get a bounce here in NVIDIA, that could be a good sign for the Qs. Or if we see it continue to drop, if we see NVIDIA continue to drop, then that would make me think that it's more likely we see the Qs come back down to those levels. But we do have Robert Roy joining us here in about 5 minutes. We'll be able to ask him what he thinks about these markets past couple weeks.
I just want to know from everyone, what are you doing and why are you doing it? Right? And I get the sense that's all you guys want to know as well. Right? What are you doing and why? Because I haven't, I sold whatever swings I sold out of last week. So I'm, as far as trading goes, I'm flat as can be. Investing is a different story. Obviously, I have a lot of long-term investments, and I don't mess with that stuff very often.
The other measure, while I'm talking about watching the Qs, and they're all very similar, but I'll watch the VIX too and see. So about 30 minutes ago when we were at that sell-off, we can see the VIX ran from about 25 up to about 26.5.
So this is the VXX, which is a proxy for the VIX.
Yeah,
not the actual VIX, but
thank you.
Close enough.
And we got to a high of 26.56, currently at 26.17. If we get back above that high, that's a big red flag for me. That's a sign that, hey, we're not through the weeds yet today. This isn't one of those days where we're going to have a bottom and just rally all afternoon. So I'm watching the VIX here because we did get it. We did move down from there. Looks like we're forming a red candle on the 5-minute chart right here. So we'll keep our eye on this.
Yeah. I'm just keeping an eye on a lot of the stocks we talked about yesterday, right? We talked about solar. We talked about crypto. By the way, we didn't do a crypto update yesterday. We totally screwed up. Let's do that right now before we bring Robert on the show. Let's just do a real fast crypto update and look at the heat map here. And because crypto, as we said this morning, if there's ever in the history of Bitcoin been a real world use case for Bitcoin, this is a test case right now. What happens when your entire country gets financially canceled? I just made that up. That's pretty cool though. Financially canceled. Bitcoin is your way around that. Let's see how it's doing. All right, bringing up my heat map on the screen, and when we see, I mean, it is green, obviously, right? Very green across the board. It's been green. It is still green. I mean, this is so fascinating because you have Russia that's basically been it's financially deplatformed, right? It's been their assets in foreign banks have been frozen. The technology platforms, Apple Pay, Google Pay, nope, frozen, right? Whether it's the national treasury or the individual consumer, they're basically been locked out of the global financial system right now. So the way around that obviously is crypto, right? And this has long been touted as a use case for this type of situation, but it's the first time it's ever happened before that we've seen a country go from being included in the global financial system to being excluded, right? So Bitcoin, Ethereum, the whole crypto market is up today. The thing I'm sort of still waiting to find out about, and only time will tell, is how much of the crypto rally is a rally with all of growth. Is a rally, how much of, because we know that Bitcoin and crypto are growth assets. Their performance is a lot of times tied to the QQQs, tied to the performance of funds like ARKK, or they're correlated. How much of this rally is a correlation with that overall trade versus the fact that this is a real fundamental reason why people will be going into Bitcoin and crypto? I don't know the answer to that question yet, but you can see that the market is sort of buying first and asking questions later. I guess it's a good sign for crypto, honestly, that on a positive fundamental development, the market moves higher, which is not always a given here in this market. So it's nice to see, as someone who owns a little bit of Bitcoin, it's cool. We're up now 6.5%, I think, in the last 24 hours. It's what the heat map says. So the problem with that logic, Venkat, who says, the only hedge against Bitcoin is the only hedge against inflation and fiat currency, is it hasn't been proven to be true. Bitcoin as an asset trades with risk assets. When you have broader market sell-offs, Bitcoin sells off too. That's the way it's been. I'm not saying whether that's right or wrong, but that's a fact. So the real world use case of Bitcoin as a hedge against inflation, first off, it's a little bit early to say that, because we've only been in this inflationary environment for less than a year. And maybe the hedge, Bitcoin as a hedge against real currency. Well, maybe that has some more teeth now. If you are in the Russian ruble, and Bitcoin is a hedge against the ruble for sure, but it's not a hedge against the dollar. So I don't know. I think Bitcoin is, again, it correlates to risk assets, which is not a reality that a lot of Bitcoin maxis will like to acknowledge, but it's true. So is this just moving with tech, or is this a real validation of Bitcoin? Don't know, frankly.
Yeah, and I will say I've seen it wouldn't be out of the question. I know Binance and some other big crypto exchanges have said they will not shut down their operations in Russia, even though some leaders have called on them to do so.
That's a whole other can of worms, right?
But what they can do is shut down and freeze assets of specific wallets. So if they find out that X Russian oligarch owns this wallet with 2 million Bitcoin, they can freeze that wallet. Binance can freeze out. Whoever hosts that wallet can freeze it. Now, all of a sudden, or not freeze the wallet, but make it to where you can't exchange it for U.S. dollars, making it. It's essentially what they've done with their reserve banks. So,
Right.
so what Russia?
You can't transact in dollars.
Right. So they have, like, say Russia is holding $500 million of U.S. stocks right now, and what they would typically do if the ruble is crashing is sell those stocks and use that money they raise from selling the stocks to buy the ruble to prop up the price. But when the U.S. comes in and says, no, you can't sell those assets, they're not seizing the assets, but they're freezing them. You can do the same thing with crypto. Exchanges can do the same thing with crypto. So once that happens, if that happens, there goes the argument too that Bitcoin can be, it can't be shut out of, leaders can't have a say of what's going. I mean, at that point, it's just like any other currency.
Right. It sort of defeats the purpose of it.
Right.
Right. Which I understand.
But
at the same time, don't you think these exchanges would cooperate if their arms got really twisted, right? Wouldn't they cooperate with a government somewhere?
Yeah, 100%. If
Right.
the U.S. says you can't let this Russian oligarch sell his Bitcoin for U.S. dollars,
they'll cooperate.
They'll cooperate. And it'll be popular. There will be people really into crypto that will not like it and say this is what they didn't want. They didn't want there to be able to have government control over crypto assets. But that takes. I mean, we'll see what happens if and when that happens. But
that's why we have 10,000 different Bitcoin exchanges, right? You don't like one just go to the next. I don't know what else to say about it. As a reminder, this segment is sponsored by Voyager. If you want free Bitcoin, which I'm sure a lot of people do right now, go to Voyager, create an account, use the offer code ZING when you sign up, ZING. Fund your account with $100, make a trade, and they will send you $50 in Bitcoin for free. That's $50 US in Bitcoin just for signing up and creating an account. All right, let's bring on Robert Roy, tradewithrob.com, tradelikeaboss.com, and he's going to talk some options. Let's do it. Yo, Rob. Oh, he's on two phones at once. Fast market. We're in a fast market, everyone. Rob, you're on mute, though, so I can't hear you.
I blew that. It was buy, sell, buy, sell, buy, sell. I blew it with the mute button.
Oh, no. That's okay.
All right. What
Story
an
of my
interesting
life.
day, huh? Or interesting days.
No kidding. No kidding. So things were looking pretty deja vu-ish all morning, but in the last hour, we've decided apparently that war is not a good thing. I don't know. I just want to know, Rob, how have you been approaching the last, basically from Thursday onward? I want to know what your Thursday, Friday, Monday, and Tuesday mornings were like.
So because of what the S&P is doing, Spencer, and just the way that it's reacting, right? If you look here, this is a daily chart, including today's intraday candle on the far right, all right?
Okay.
You go back from last week, and it's not even just there. It's all the talk that led up to it back from February 10th. We saw that pullback and the jump that dropped down. And I want you to watch as we move through these candles day by day. I want you to look at the various horizontal lines that are in there. You got one purple one, a bunch of reds. There's a blue down here, and these dot dash, right? We respect right on this day, the 100 and that red line, we went right to it. We opened near the 100. We went right to the red line with a wick all the way down here. Same thing in here. Here we played ping pong, right? That was nothing. We closed here. We closed here. We closed here. This was the big catalyst day. We opened at the 100. And then today has been a great day. So utilizing, for me, fibs, and I know others are using different indicators, and that's fine, but I know fibs work because they work for us. They work for what I do. I know they work for me. And the reason is they're harmonic. They're in tune with nature. And people don't know why stocks and markets stop where they do or run to where they do. Almost always you will find that there is a Fibonacci level hidden back there. So utilizing the fibs has been the biggest part of it. And making sure that my time frames are all day trade. We hold nothing overnight at this point on our directional trades. We do on some of the selling positions. We've got a better chance of being right in that trade. But on our directional trade, Spencer, it's all bringing it down to getting in on day trades, managing the position with tight stops, and calling it a day if it goes against us.
All right, so let's talk specific markets here. So this is the SPX, the S&P 500, which of course is not tradable in and of itself. You have to go to an ETF that replicates it. So have you been trading SPY just like that?
Absolutely, including today. SPY has become, I've always loved SPY. I was probably one of the first people out there teaching SPY and Qs trades back in 1999, 2000, 2002, somewhere in that area, just very early on teaching about trading the Qs and so forth. And I like the Qs much better when I first got started with it. But SPY to me has become such a better trading vehicle. I still like Qs, but I like the SPY's movement. It does not seem to have the whips based on an Apple or something like that getting thrown around and getting the big whips in the position. So if you look at today, Spencer, this is again daily chart, right? We've got a red line here, which is a Fibonacci level. You got the pink moving average, which is the 8. I know we talked about moving average the last time I was on a little bit, and which gives us a confluence. You have two levels happening at the same place, right? Well, what happened? We opened up, right? We ran up, we failed, and then the question all comes down to how do we approach the 343.74 level? So 343.74, right? If we go to an intraday chart and we look at SPY, I've got the 343.74, right? Vertical line on the screen is today. So what happened? If we got a nice move up today on the open, we came down, we closed below on this candle, very long wick candle, a lot of indecision on that candle. Bulls and bears fought, bears won. We closed below that horizontal line, the 434.74 level. And what happened on the next candle? We pushed up from that big candle. We came down, retested again, and failed. That gave an entry signal right there on that candle. That was a day trade entry signal for us right there, right? Did we take a little bit of heat? Yep, we sure did. Was it much? You moved up 75 cents or so. It's not that big a deal, right? We pushed back down, and now we're getting a little bit of a climb. There's multiple ways you could exit out of this position, whether you use the moving averages, whether you use a trailing stop for it. But finding the entry, Spencer, the right entry is going to be a tremendous part of it. When I was in purchasing and in manufacturing, we didn't make our money on the sale. We made our money on the buy. We had to buy right. We had to get a good price on the purchase of what we were going to sell, and then we could make some money on the tail end because you're fighting with everybody else at the same price. It's no different here. You need the best entry possible to really make it work on the tail end, especially in a market like this.
So let's talk about how to get that best entry.
So bottom line is this. It all comes down to, here, let me bring it back to a day chart first, all right?
Okay.
And I do use two different charting systems purposely. This charting system gives me a much better ability to scan the markets than what I have in a trade station or TOS and so forth, without being a professional programmer. So I look for confluence. That's the very first step, Spencer. Find a confluence level, a moving average, and a fib line. So we had it today on SPY. If we look, I've got a couple of check marks in there. So we have it today on Adobe, right? We're sitting right at our fib line with Adobe. Look at the move in there, right? We're going to talk about some of these as trade setups for tomorrow. Not this one. Let's see. There's no confluence there. No confluence there at all. Right? So we have confluence on Facebook. I don't think Zuckerberg.
And hold on, just to pause here for a second. So two questions. One, no confluence means hands off, right?
So no confluence is a more aggressive trade. So I don't want to say it's a hands
Right.
off. We graded A, B, and C. A is yes, that's confluence. We're in the right place. We've got a clear and concise entry, clear path to our target, concise. We're getting in at the right place. We're not getting in the middle somewhere, right? So this would be an A setup. A B would be the ones that we do not have a confluence, but we've got another reason there. As an example, on booking, we broke down. If we can come back up and retest on this blue fib line and fail, we could still take the trade, but we should be taking it at less contracts, less dollars in that trade because it's more aggressive. A C trade would just be, there's nothing setting up. Crazy people take this one. I'll pass and walk away from that one.
So the second question was, I know you typically you like to trade. You have your core stocks that you will stick to, your core list, and you will stick to that, and you will trade those names. In times like this, where you've got war in Europe for the first time in 80 years, and you've got the market doing all sorts of crazy things, do you expand or contract that list? Do you expand your universe to include more things because there's more volatility and more, or do you go the other way, or nothing?
Well, good question. So I always look for other trades every day. This core 20, which is what's on the screen here, folks, you can screenshot it. It's all yours, right? That's the candidates of what I trade every single day. And that core list of candidates is just that. It's the ones that I have a dossier on. I know how they react around earnings. I know how they react in the afternoon, how they react around lunchtime. I know how they eat, breathe, sleep, drink, right? I understand these stocks inside and out, right? Things that I've spent a decade plus building on these candidates, right? Now, that doesn't mean I don't trade anything else. I still have other positions. I still do my selling positions where I have a much higher percentage potential of being right in the trade, especially with the higher VIX right now. We're getting amazing premium on covered calls and naked puts. It's great. But when we get to diagonal spreads, I pay a lot of cash to buy a long-term option right now because of the VIX. So that trade becomes a little bit harder to find the right one. But if I do, I will still trade them. And I do trade news candidates every day. W Day, as an example, was on news today, right? It was earnings, right, that they came out with. Awesome, right? Well, because they've got news backing it up and I see the news came out and I trade that company anyway, I just feel more inclined to gravitate to that one because I have a better chance of being right because I know what to expect when I get in the arena. Where I trade a Microsoft, I don't really trade that. So I don't know what to expect with a Mr. Softy or something, or an AMD maybe, or whoever the company might be that's not on my normal list.
Got it. All right. So now let's keep going here on this train of finding the entry. So let's go to a chart where we had a confluence of indicators here, a Fibonacci and a moving average, or what is that? It's hard. What is that? That's
a moving average,
Adobe.
right? And
Adobe. Okay. Right. So that was Adobe we just had. So
Adobe was one. Let's see. Roku has got to check. Okay. So let's use Roku. You good with Roku?
Yep.
A little bit lower price, lower cost options. It moves $13 a day for a $140 stock, which is fantastic. There's plenty of movement to take premium out of this position. So when we dig into it, and I see that the 8 moving average, and that's the ones that I use. You can use any ones you want. The 8 moving average is my short term. When I see that it overlays on that fib level, what I will do is I will transfer that 138.24. I'll transfer that over to my intraday chart. Right? So if I go over to Roku, I'm going to snap a line and I'm going to put it at 138.24. All right. So now what am I looking for? If I can find the right entry around that level, and of course, I am looking at the overall pattern on Roku is bearish. Big long-term downtrend. Moving averages are all trending bearish. The smallest or the lowest setting moving average, the 8 is on the bottom. That's the pink line. The green is a 21 in the middle, and the brown is a 55 on top. All 3 of those lines pointing in the right direction, down. We're just above the 8 moving average now. So what do I need to see happen? On an intraday basis, I am looking at the stock making a move and breaking down below that level, closing below it, coming back and retesting the level and then failing. That's what I'm looking for. So we got close with the wick here, but really wasn't a great retest, but we did get close. We move out through this range here, and now we closed below, we push back up. That would not have been a bad one right there, right? As a potential entry into a bearish trade, all predicated on time of day, right? For me, 11:40 is too late in the afternoon for me to want to take this trade. Usually by 11:30, it's lunchtime for me. Things get sloppy, and even more so in this kind of market condition, but things get sloppy and I tend to walk away until about 1:30 or so in the afternoon, and then I'll come back again. But when you see that type of setup, Spencer, right in here, where we broke, closed below that key level, retested it and failed, there's the entry. And this, if you didn't take it there, this would be tough.
Well, where in that candle is the candle's a little bit big there. So where in that candle is the entry? Anywhere in that candle?
So now we take it because my charts will normally be this right here. It's a 4-pack, right? The fifth chart upper right is just for the pre-market stuff. So I've got a 1 minute, a 5 minute, a 30 minute, and a daily chart. So I can get a big picture view of what's going on in all market and all time frames. So if we're looking at this candle here, that's the 1140 candle, right? Let's change this over to a 1 minute chart. Horizontal line stays where it was, and let's go find 1140. Now that 1140 means that's the closing time of the candle. So anywhere between 1136 and 1140 is that 5 minute candle. So if we're looking at 11, there's 34, 35, 36. So what happened? On the 1134 candle, we closed here. The 1135, we closed right in the same spot. The 1136, we got this push up, and our high there was 138.03 versus 138.24. We're 21 cents away. Ironically, it's a Fibonacci number, but I digress. We're only 21 cents away from that line. As far as I'm concerned, we smashed the line. We hit it. We're there. That would be the potential as the entry off of that setup right in there. Here was the break. Here was the retest. On this candle was the retest, the long wick, that doji candle. And here was the fail. So that candle right there, that's the big E for a bearish entry.
And this was on the 1 minute. Yeah.
This breaks it down on Roku to the 1 minute chart.
So let's talk about the exit though. So let's talk about the exit on that bullish trade though. So we got in. I don't think we were looking at the.
We're taking a bearish trade here.
I'm sorry. That's what I meant. The exit. Yeah, the exit on that. I'm doing 4 things at once. I'm watching the chat. I'm listening to you, and I can't take my eye off the overall market, because if I do for 5 seconds, crazy things happen.
Right. So, you're gonna be in trouble if you do. Right. I know.
Yeah.
So my target, Spencer, the way these fib lines lay out, if you look at the distance between the two fib lines that are here, and I'm just going to do an estimation. I'm not going to worry about trying to get it exact here. If we look at the distance of these two lines, that distance is $18 between there, right? Then you go over to Roku on the far left, and you will see there is a number in the box there that says 2678. That is the Wilder's average true range times 2. That's all it is. Double the Wilder's average true range, right? You can easily do it without having it there. You just have to do it mentally in your head, right? So is $18 greater than that number in there? And the answer is no. Then that line is close enough that I can make an attack on it somewhere over the next 2 to 3 days on that level, right? Because we're doubling the Wilders, which is the normal move of high to low in the last 13 days, we can make that attempt over the next 2 to 3 days. I'm looking at it for a day trade only, but that means that in this setup, I can move high to low about $13. Well, this is 18. I've got plenty of room to pick up some really nice premium income. So what I would do is my stop is based on where we are with our confluence and the percentage of movement above these two, between these two fib lines here. So Spencer, interrupt me if I lose you at any point on this. Okay, fair?
No, I'm still with you.
Okay. I mean on this next piece. This is where it gets interesting.
Okay.
We're going to split these two levels up. And what I am looking for is, let's see if I could just get rid of that gray line to make it easier. Delete line. Okay. So by cutting those in half, what I've done, or cutting them out, what I've done is I put a line in here that's 25% of the distance between these two lines. We're coming 25% up, and that's where our stop is. Does that make sense?
Is that why 25% though? Is that just a
back tested? About 2.5 million days of testing.
So that's just a general rule of thumb, though. That's not specific to Roku. That's not specific to today. It's
correct, because it's not today. It's not Roku. It's period. Right? Are you going to have trades go against you? Yes, absolutely. And in many cases, it's the best thing that can happen, because when it goes against you, hits 25% above that level, and you're taken out, in many cases, it runs 50 and 75%. It just flipped and turned the opposite direction. So my stop would be 142.25 on this setup, right? So we bring it back here. My stop is 142.25.
We lost it.
Yep. Yeah, it's off the screen. Did I do something wrong? No, 142.25. It's just too big of a. Just too wide. You know what it says?
Oh, you're off the screen there. Wow, your stop is off the chart, Rob. Oh, there we go.
Off the charts, baby. It's because it was a 1 minute chart, right? So here we are. There's our stop there. We got nowhere near that stop today. We weren't taken out, even though we looked at the 1140 candle as a potential entry. Even at this point, we're still in. Again, I wouldn't take the entry at 1140, but that's the stop, right? And then my target is going to be based on that next target. Right? As long as we don't take our stop out, I'm going to let my stock run. Right? If I can get half of this distance inside of these two fib lines, so let's call it 120 to 138, that gives me whatever that middle point is. If I can get at least half, which puts me to about 129, if I can get down to 129, I'm selling half of my trade out of the position. And then I'll manage the second half of the trade with a trailing stop or some order type like that. Does that all make sense?
I think it makes sense to me. I'm hoping it makes sense to the chat, everyone watching. And as W Tucker asked in the chat, so Robert's using TradeStation and he's also using his own custom charting platform.
Correct. Omega Charts. Yes.
Yep. Omega Charts. Let's take some tickers from the chat, Rob.
Sure.
Daniel wants to know about Bank America. The banks are getting beat up today. He's certainly right about that. I mean, everything is more or less getting beat up today. But what about Bank America?
Yeah, so dividend coming out shortly. How is that dividend? 21 cents. I don't think that's anything crazy for them. No, that's about what they pay. So that's not a concern right there, right? So, yeah, banks getting beat, right? Where are they? It's in a bearish bias. So had you seen where it opened today, watched it drop below the 43.39, if it retested and failed, 42.20 is our next target. That's our next support level. You're going to get out before that, but that's our next support level. We went right there and stopped right at that line. Right? Doesn't mean it's done for the day. But had you been trading utilizing this method, look what that would have done. And this is not me cherry picking it. This is your stock, right? Someone in the chat stock and fibs that I've already had drawn on top of here, right? It went right to that level. And it is the most important level on the chart, that purple line, that 618. Look it up on Fibonacci. 0.618 is the golden ratio, divine proportion, golden mean. It is the most important line, the most important number in the universe, period, in math, is 0.618. So for me, I'd be taking it bearish. Tomorrow, if we break the 42.20, retest and fail, 40.73 is my next target. But I wouldn't be doing that today. It's had too big of a move already.
Okay. It's funny. And part of me always wonders, Rob, just how self-fulfilling these fib numbers are, because, you know, no one understands why they work. They just work. And I wonder if part of the reason they work is because people think they work. And then it's a self-fulfilling prophecy. But I guess we'll never know.
Well, so if you took a group of 100 people and said, how many of you are actually trading using Fibonacci's, most are going to tell you no. So the self-fulfilling prophecy becomes hard from the standpoint of those traders are all using fibs. I don't think that's the case. I find it all the time, and I'm a major fib user. And I would say 10% of people come to us and have even heard of fibs before in the market. They've heard of it on the Da Vinci Code, right? But not in the market. So the self-fulfilling prophecy, where I agree with you, Spencer, you are spot on, is they are harmonic. Why does it gravitate to that level? It's not because of the traders that are using them, I don't believe. I think it's part, but I think it's an emotional stopping point where someone just says, you know what? I don't know why, but I think this is a good place to get in, or I think this is a good place to get out. I think that's a big piece of what happens there at those levels when you're not using them. Scratch your head and say, why did this stop where it did? And snap a fib line on, and more than likely you'll find that there's a historical fib level that comes close to it. Not always, like you can see here. This was not. That was an anomaly day, but look at everything that led up to it. And that went right after it. We were right on that fib line. We used it from the downside, but we didn't bounce off it at the bottom level of it.
All right, we'll do some more stocks in the chat. For Mike, what about Snow? Oh, Snow was one of those tech names that got so beaten down off its. It had a huge run off its IPO and then got so beaten down. But I'm assuming it's lower today, having been higher since Thursday.
16 cents up. So
Okay.
kind of flat, not really a whole lot happening on a $260 stock. So what's happening here? Look at the last 3 days of trading. These 3 candles. They are maintaining their bottoms, and the 8 moving average is acting as a descending triangle on there. So we're pushing the wedge to the bottom. Now, I see, and we always want to confirm it, but it looks like earnings are coming out shortly. If so, I'd be very concerned with trying to take anything on it until after the earnings. Personally, I don't guess against earnings and hope I'm right. The last time I did it, it was Apple, and after 27 quarters in a row, Apple missed, and then it goes the opposite direction, right? That's the one I picked, and held on to that option and gave about $8,000 back on that trade. Months of agony of trying to manage that position out, doubling down, nothing worked no matter what I did. So I don't try to guess it. I'll let the earnings come out and let the chips fall what they'll do. We'll trade this one tomorrow after the earnings announcement comes out, right? If we break that 263 retest and fail, let's see, 32, 42, 52, 62. Okay. So Spencer, remember I talked about this Fibit number here, this 26. Oh, wrong one. My bad. I'm looking at, I don't have that on this list. Let's get Snow back over there, and let's see what that is. It's not telling me. So let's just go here. So Snow moves, we'll call it $19 a day, right? So 38 is our number. So 233 to 263, that's $30. We're good. We don't need to split that level. I thought we did because I was looking at Roku's number. But if we break, retest, and fail, I'm looking at the 232.83. Now, many traders are going to fight this. You're going to get a bounce on it, pretend, right? You get a bounce on Snow tomorrow, right? And it goes up, and it's somewhere in between here, right? At this level where my horizontal line is. And traders are saying, hey, I want to jump in early and try to catch the bounce. And you can. It is not the way I trade it. That, to me, becomes very much a wait scenario, and I want to see, will it break above that 21 moving average, which now has a fib level there, break above, retest, and bounce, and I have a new confluence, and I'll take the bullish entry there. I will not fight it if we get that small bullish move up. Too many times we move right back up to that fib level, and we die right at that level and fail off, and you've got traders that have jumped in, $1, $2, $3 below, and they're sitting there sucking on their thumb trying to figure out, what do I do now that it's dropped $12 and I'm still in this position?
Awesome. We'll do a couple more with Rob, then we got to let him go. Let's do... Oh, wait, there was also a question. How does Rob pick the top and the bottom for his fib lines?
So here's the phrase, guys. Write this down. If you're not familiar with fibs, write this down. You're looking for the largest directional move closest to the right side of the chart. Directional move. Let's look at Apple. All right, let's go back, and we don't need that bar. Let's take that orange bar off of there for now. Okay, so we're looking at the largest directional move closest to the right side of the chart. You'll notice that there are fib lines drawn all over the place. Actually, if I were to back this up, it would be very difficult to see everything that's there. That's how many fib levels there are, right, on my charts. So, but we back it up just enough, and what's happened here? We had a nice V bottom. Let's try with a pen tool. We had a nice V bottom, a good, strong, bullish thrusting pattern, and a V top, right? And then we did our thing. We violated this level, and at that point, the -618, we've got to redraw the fibs. So we redrew them in here. After we made that move, we redrew the fibs there, right? Well, then we had a bigger directional move down in here, so we drew off of that V top and that V bottom. And if we look at how important this particular fib level is, of the one I've got drawn right now, I'll take it where there's no moving averages. Right? Look at this. Tell me what you see. What is this?
V bottom? No, sorry. Yeah, I spoke too soon.
You're right. It was a V bottom. You're right. But what? It's a letter. What letter is it?
W.
That's an upside. That's
H.
an M, man.
It's an
Wait,
H.
wait, what is that?
It's an H.
Oh, wait.
I know. In grade school, we were taught to draw them like this, right? But on Fibonacci, they're more
right.
like this.
Okay.
All right. That is the most profitable letter in the alphabet. Better than a W, better than an M. We get this move up to a 618 level and a fail, which is what we had here when we finally broke. Not all of this up here, but we finally broke. We got 1.5 lines. That was the first attempt there. We came back and we moved 1, 2. Now, normally you only get 2.5 lines. This time, because of the fight with Putin and Ukraine, with Russia and Ukraine, the war, we got a much bigger drawdown there. But that pattern, that H pattern, is absolutely phenomenal to capture in there. So this Apple fib set up for a move from 172 to 169, and then for a move from 172 down to 165, which is where my target would have been for the second exit on that trade. I would have missed some of this, but that would have been day trades the following days. So I'm not too concerned with it. All right. I hope that answers it for the fibs. Guys, if you go over to Spencer, that website you have for us, tradinglikeaboss.com, there is a free training on there, folks, on Fibonacci. You don't, there's no, it's everything on this page is free, but this Fibonacci, today's power indicator, it's a 3-part series. It's about an hour long. It teaches you how to draw the fibs the way that I do, right? The more of you I can get drawing the fibs, go back to what Spencer said, the better off you have as a self-fulfilling prophecy that those charts tend to move off of those particular fib levels.
I just put the link. Here, let me make it cleaner on the screen, but it's tradinglikeaboss.com.
Yes, sir.
There it is up on the screen. I'll put it in the chat as well so everyone sees
Appreciate that.
And there it is. And Rob Roy joins us every other week to run through his charts and tell us how he's trading. And you answered my question I had off the top, which was like, I just want to know what you're doing these last 3 days. And unfortunately for me, what you've doing the last 3 days is not that different than what you always do. You mostly just, I was kind of hoping for a little bit more excitement, but you're sticking to your plan, which I guess is what works for you. That's why you're profitable. But I was hoping for a little more, oh my God, buy, sell. That's what I was hoping for off the top.
Yeah,
but,
that was cool in the beginning there. But yeah, it's just, I try to make it, my mentor that I first got when I first started in 1997 told me, you want to get to the point when you trade that it's like boredom to you. You want to trade as it's boring. And I can't get there because it's my money that's on the line, but you want to get that emotion as close to it as possible, having as little as emotion as possible. If you can't sleep at night and you're stressed out, I would not do well holding positions overnight like this on Amazon, Booking, Google, Chipotle, Tesla, NVIDIA, Netflix, some of the major ones that I trade. I wouldn't do well holding those overnight, thinking what happens if the market flips the other direction tomorrow. And in this condition, I'm not talking about in a regular market, in this condition, it's too painful. So I'll stick with boring, vanilla, plain Jane. And last week we did 7 trades and had 1 go against us.
Wow. That's a good winning percentage right there.
Boring is
We're at
good.
about
Boring.
74, 75% this year so far. We've had our most 2 profitable months ever in our Power Option Plays program, ever, in the last 2 months.
Wow. All right, Rob Roy, thanks for coming on today. As always, tradinglikeaboss.com. Have a good one, man.
Excellent. Take care, guys. See you soon.
All right.
See you, Rob.
We're going to have our next guest on in 10 minutes or so.
Thank you, JJ Jalvez, or JJ Velas. Sorry. If you love this channel, you can become a Benzinga YouTube member. By doing so, you may see some others in the chat. You get access to a bunch of fun emojis.
You get emojis. You get bragging rights because your comments look special. They look green. At least to me, they do. Maybe I'm colorblind. You get badges, emojis, and there will be more coming. So check it out. You just got to go to our YouTube page and click that join button, and that potentially gives you access to. There will be a point soon where we connect the YouTube membership to other Benzinga products. We're not quite there yet, but over 200 people, I believe, have already joined YouTube membership. Maybe,
Wow.
Maybe I'm conflating my numbers. But
Maybe
I'm just
you're
gonna
embellishing a little bit.
Go with that. I'm gonna go with that. Anyway, it is 121 here. As things have more or less, I don't want to say calm down, but
Yeah.
call me when we make a new low of the day, all right? Which we haven't done, and I'm watching the Qs more so than the SPY, because the Qs are whoa.
Well, I'm watching.
Weird camera stuff.
I'm watching the
dude.
VIX, Spencer. As you pointed out, I'm actually watching the VXX.
Yeah.
But we are approaching our high of the day in the VXX. It looks like we may get a little. Let me just go ahead and share my screen so that I can.
Yeah.
You guys can see what I'm looking at when I talk. But we may get a little double top up here on the VIX, which I would see as bullish for the rest of the day at least. As you can see here, our absolute high of the day on this candle, let me zoom in, was 26.56. We are now at 26.36, so just about 20 cents to go up to that point. But it does look like right now we're running into some resistance. So if I see another red candle on here on the 5-minute on the VXX, I'm going to take that as a sign that we have, at least for now, bottomed on the day in terms of, or peaked on the day in terms of fear in the market, which would usually correlate with the bottom of the day in terms of lows. Again, this is nothing 100%, but just something I'm watching.
Is there news on the cruise lines today? Royal Caribbean is down. RCL is down. It's pretty on my screen.
Yeah, you didn't hear Russia said that's their top target for a nuke?
Dude, I want to laugh at that, but I can't.
I was watching a bunch of YouTube videos last night.
That's never a good thing.
I know.
Although so was I. So.
Anytime you start a sentence, I was watching a bunch of YouTube videos
Never
last night.
a good
Never
thing.
a good-
Yeah.
There was one that was made like 2 years ago, and this guy was like, what would happen if like US and Russia went to war? And he was giving his predictions, and he said, he's like, it's March 2022, and NATO officially, it was like timing wise, it was like very kind of weird how close it was. But then my friend pointed out that you can like edit YouTube videos, but it didn't seem to me that's what had happened. And I don't even know how like true that is, if you can edit YouTube videos that have been published. Rohan probably knows. I think you can like trim them. I don't think you can like add things in. I could be wrong.
I don't know. No, tough day for the cruise lines. Easy Mike says it's all travel. So, but why is Norwegian holding up? Is this a question of like Russian exposure, like to these companies? Is that? I don't know. Like, why would Norwegian Cruise Lines be green? It's up one. Well, here, let's just go. It's not green today, but it's if you go back to Thursday, it is outperforming RCL and CCL dramatically. So it's green going back to Thursday. It's not green today, obviously, but is there a reason for this? I don't know. That's weird. And then I also wanted to. I was going to mention this earlier, but I forgot when we had Matt on the show at 12:30 talking about investing in countries that are free and are good. There actually is an ETF that does this. The ticker is FRDM. It's the Freedom 100 Emerging Markets ETF. I've been wanting to get Perth Toll, the woman that created this index, on the show. I haven't done it yet, but this ETF actually, they invest in emerging markets, but they exclude markets that are not free.
Oh,
so
can you pull up VXX real quick? We are approaching
new high of the day.
New high of the day.
All right.
I
I also want to talk about some other ETFs for a second. I want to talk about some Russian ETFs. I talked about them this morning.
RSX,
and I want to talk about RUSL. But VXX, new high of the day. Interesting, right there.
Yeah. Let's
So-
see. I'm gonna watch this chart for a second because I do think this is a good.
So wait, just to be clear, and I will admit to not have the best understanding of this. The VXX is an exchange traded product. It's an ETN, so it's like an ETF, but not. And the ETN itself, the VXX product, it holds short-term VIX futures, right? So
Yes.
So, and as opposed to like owning long-term VIX futures, it holds like. So I'm wondering, like, does anyone know? Are there like rollover effects? I would imagine there are, right? Because they have to. Yeah, that's why the thing goes down.
It's funny you're asking about this, Spencer, because here, let me share my screen real quick. And I put this link in our document, and we can look at it. But Bloomberg wrote or published an article about the increase in assets flowing into leveraged and inversed ETFs.
Can you wait? I'm sorry. Say that again.
So Bloomberg wrote an article, did a report on, basically it's called "Wall Street's Risky Razor Blade Trade is Making a Comeback." For a while,
I've never heard of the term razor blade trade, so you're gonna have to fill me in here.
Well, as they explain in this article, they or at least one like institutional investor says, "I would implore everyone who's trading leveraged ETFs to understand that you're reaching into a drawer of razor blades."
Okay, makes sense.
So yeah, as you can see from this chart here, this shows in blue you have ETFs that are inverse, in black are ones that are leveraged. Just the total amount of assets held in these.
AUM. So yeah.
But basically, it talks about kind of the pros and cons of trading levered ETFs. Obviously, the pros, you can make more money, make that money quicker. The cons are that, which this was really interesting to me, which they explain in this article, that depending on how like the daily price action works out. Say I invest in TQQQ, which is a 3 times levered ETF of the Qs, and the Qs are positive over a month, say up 0.5%, there's a chance that my TQQ position was actually down, depending on, it's not just as simple as, oh, the Qs were up 0.5% over a month. That means that the TQQQ would be up 1.5%, 3 times that. No, it's not that simple.
I'm glad you brought this up. Starting, I believe, this Friday, we're going to be having a recurring segment on this show with Direction ETFs. Direction is the provider of one of the major providers. There's a few of leveraged products, of leveraged ETFs and inverse ETFs. And we're going to, just like we do with Trade Zero, where we do like a segment all about shorting, we're going to do a segment all about leverage and inverse ETFs and how to use and how they work. I believe we're going to start this Friday at, I think I have it on the calendar, like 1 o'clock, I think. So we're going to have Dave Mazza from Direction on this show every week to talk about this, because it is complicated, and I feel like a broken record because we say it all the time. But if you're trading these, they are meant to be used, first off, as trading instruments. Second, understand what Aaron just said, that just because the name of the fund says, oh, it's a 3 times leveraged product, does not mean necessarily that you're going to have 3 times the returns. And that's why if you pull up a chart of the VXX, as I just did, a long-term chart, this is a bit of a different beast, but the long-term trend is down because there are rollover effects, and there are similar types of long-term headwinds when using leverage, right? So these are not meant to be used as long-term instruments. They make that abundantly clear in the materials. But if you have questions about, no, they're honestly not. They're not scams. They're really not. They just have to be used correctly. If you use them wrong, then yeah, you're gonna lose. You're gonna lose money. But they exist for a reason. They can work for you if you use them correctly for short-term trades only.
Yeah, and I'm just gonna pull this up one more time, Spencer. The reason why I thought it was interesting that we were talking about the VIX is because they actually, and which I didn't know this. Let me try to find it real quick. Yeah, they talk about the VIX here. 2018, the velocity shares VIX, or the VIX short-term note, the XIV, melted from almost 2 billion in assets to 63 million in a single session, known as
Wait, I'm sorry. Say 2 million?
2 billion.
2 billion to 63 billion.
No.
That's the what's it called? The Volpocalypse. That's what
Volmageddon.
Whatever. Yeah,
It's right here.
It's
yeah.
right there. Volmageddon.
2 billion in 63 in a single day. So
Yep.
essentially, people were buying the inverse short term, basically shorting the VIX, saying, okay, markets go up over time, VIX goes down. And then there was a day in February 2018 where markets were volatile, the VIX went up.
I remember that day.
Yeah, and it was crazy. But you're putting these instruments in the hands of anyone, essentially, says Robert Whaley, a finance professor at Vanderbilt University who created the VIX in 1993. So this guy just made the VIX up in 1993. Like, I thought it was some like 100-year-old, indicator of fear in the markets. No, this guy from Vanderbilt just made it up in 1993. We should get him on the show to talk about the VIX and why it's important.
Yeah.
But yeah, I mean, essentially, bottom line, leveraged and inverse ETFs, fun, useful, but you got to be careful. You got to know what you're doing.
All right. Well, let's table this conversation. We're going to come back to it in a second. But we do have our last guest of the day here right now. Erez Raphael, the CEO of Dario Health, and this is a company that is in the Benzinga ecosystem. They had news today. We always say, hey, if you have news, please tell us. And this company was like, "Hey guys, we have news today. We announced a partnership with Sanofi. So let's get Erez on the show right now. Give him the special intro and find out what this news means for the company. You're going to give him the special intro." Erez, welcome to the show. How are we doing today?
Thank you, Spencer. Thanks. Amazing intro.
Thank you very much.
Hey, we worked very, very hard on that intro. It took
The best designers in the world, right?
countless hours you don't even know. So anyway, tell us about the news here. As I mentioned, it was you guys announced a partnership with Sanofi today. Explain what the partnership means for you.
Yeah. So first of all, it's big for us. I mean, we are $150 million market cap, doing a deal with a $130 billion company. And I think it's a big news for us and also big news for the industry. Digital health and digital therapeutics is evolving industry. There are a lot of companies out there, especially on the private market. And Sanofi literally said today that they're looking into this space. They want to be part of this space. They believe that healthcare is going to be dominated in the future by digital health companies and by consumer centricity and virtual health. And they made a decision to make a strategic partnership with us. In practice, these strategic partnerships will get us $30 million that should be recognized as revenue in the next few years. So that's positive number one. Positive number two is that Sanofi are going to commercial our platform, which means that we are getting many multiples of sales power on top of what we already have, which means that this is something that should contribute to the top line also from that perspective.
So what is your platform exactly?
The platform is a chronic condition management platform. The company started with diabetes only, expanded into hypertension, weight loss. Recently, we did 3 acquisitions to get into the musculoskeletal space and the mental health. So today, Dario is one of the most comprehensive digital therapeutics platform in the world. It means that we have our own medical devices, we have our own software platform with software application, and we literally help users in between the doctor visits to get care for their chronic condition 24/7. That's what we are doing, and we are helping people improve their clinical outcomes. So the way to think about us is a solution that is promoting health in between the doctor visits. From a financial profile perspective, the way to think about us is a software company that is operating as a SaaS, software as a service company in the healthcare space. That's the way to think about Dario.
So Sanofi is basically going to market and sell your platform.
Yes. That's the main agreement. There is also elements that related to knowledge transfer, to data, elements that related to integrating specific pieces of Sanofi technology that might be related to insulin delivery and others into our platform, which means that we will be a kind of the digital platform, digital vehicle in order to deliver their products as well in a digital way to patients in the States and at some stage also in the rest of the world.
And then who are they selling this to?
Yeah, so Dario today is selling mainly to self-insured employers and to health plans, insurance companies. Sanofi have years of relationships with insurance companies and health plans in the United States. And Sanofi are going to focus on this channel for us. We do have our own salespeople that are selling into the health plan channel, but Sanofi are going to focus on this channel, which is the most important and biggest channel that there is out there. And we believe that with their relationship, with their understanding of the market, with their understanding of value-based care, and in a combination with a very strong technology that we bring, we believe that this is something that should push our sales intensively in the next few years.
You call yourself a digital health company. What exactly does that mean?
Yeah, it means that, and this is a very good question because we see kind of in Wall Street people are getting confused between telemedicine and telehealth to what we are doing, which is digital health and digital therapeutics. So everyone is talking about the virtualization of health. So the telemedicine company will try to scale up the capabilities of the doctors. So when doctor is seeing 20 people a day, 30 people a day, they will try to create a technology that will help doctors to see 100 patients a day. What we are doing is we are saying, hey, there is a bigger problem in the healthcare industry. It's very healthcare professional centric. It's not user centric, and it's not virtual. We need to make it virtual, digital, and consumer centric, which means that we are helping the patients, not the doctors, the patients in between the doctor visits. We are giving them all the tools that they need in order to manage their chronic conditions. We are saying that eventually managing chronic condition is something that needs to be done by the patients in between the doctor visits. Otherwise, they will not be healthier. They will just rely on drugs that they need to get from the doctor every quarter, and they are not taking care of themselves from a wellness perspective, from medication adherence perspective, and we are trying to help them. This is what digital health and digital therapeutics means. And in a very, very practical way, if you look into the data that our system is generating, patients are improving clinical outcomes, and we are saving money to health plans. So if we are looking into measures like hemoglobin A1C, which is the main measure to track whether people with diabetes are managing their disease, we are improving all these parameters, and we are showing literally savings for health plans and self-insured employers in the US. That's the practical thing of being a digital health company.
So aside from Sanofi, selling your technology, are there other potential synergies available down the road, or?
It's absolutely. So Dario Health is a company that was established in a global mindset. If you're looking on the platform is like speaking 7 different languages. It was cleared by the FDA, it was cleared by the TGA in Australia, and it was cleared by the CE in Europe and Health Canada. In other words, we are one of the only companies out there that is not just multi-condition, but also multi-region and multi-territory, which means that Sanofi as a global company can at some point take it to Europe or to China or to other territories. That's another way to collaborate in the future. And another way to collaborate is in fact expanding the offering capabilities by integrating pieces of technologies together, which is something that we are planning to do. So that's another big advantage to this partnership. And I think that there is an obvious thing that the market is asking today. I mean, with all these medtech companies getting the hit in the market and growth companies that are burning cash, that's something that is concerning investors. And I think that this is also big news for Dario from that end, because alongside with the deal with Sanofi today, that gives us $30 million, we also raised $40 million mainly from our existing shareholders that are supporting the company for the last few years. And if you're looking into our balance sheet, at the end of Q3, we had $51.3 million on the balance sheet. If you consider a potential $30 million in revenue that we're going to get from the deal, plus $40 million that we raised today, plus a potential equity investment by Sanofi later this year, I think that our company is very, very well funded, which is a concern that we wanted to remove from the market. And this is why we also raised money alongside with the Sanofi deal. So we have a very positive day today.
All right, Erez Raphael, the CEO of Dario Health. You can see the chart up on the screen with the ticker. Erez, thanks for coming on Benzinga Live today.
Thank you so much. Thanks.
All right. Let's go back quickly to the conversation we were just having about just the ETFs. And I just wanted to, I went on this rant this morning, and I'm going to bring up the chart right now of the, well, there's two charts. Okay, let's start with, we were talking about direction and leverage funds. So RUSL. Let's be absolutely clear about what's happening here. Okay, RUSL, the fund is being liquidated. How do I know this? Because Direction literally said so. They have a press release. I have a news feed here for press releases. I'll do a search for the ticker RUSL. You can do it in press release. You can do it in the Benzinga Wire news feed. Two press releases of interest here. Let me zoom in for you. All right. First one, 6:55 p.m. last night. Direction to close and liquidate RUSL. Yes. As of the close on March 11th, the fund will cease to exist. It means if you have your money in this fund, it will be redeemed. You will see that balance in your account, but the fund will cease to exist as of March 11th. That's the first thing. The second thing is, as of last week, they were announced they're no longer accepting creations of its shares. This is very important. All right. The creation and redemption mechanism of ETFs, that's what keeps the price in line. That's what keeps the price of the ETF in line with the price of the holdings. Okay, when you take away the creation or the redemption aspect of it, it means the price of the fund can do some really funky things as it pertains to the price of whatever it's called the NAV, the NAV, the net asset value, whatever it's actually worth, right? So call it fair value, right? So this RUSL fund is closing, and they're no longer they're no longer doing creations. What does that translate to? Well, one of the implications of that is this press release this morning. RUSL will be underexposed at market open. They put this out at 8:30. They gave you an hour notice, an hour's heads up. If you're trading RUSL and you say, hey, RUXL, I'm buying this because I want 2 times leverage. I want 200% exposure to the stuff that's in this fund. Well, as of this morning, you only got 111%, not 200% leverage. So you were underexposed this morning. There's a whole lot of complicated plumbing here. The bottom line with RUSL, though, is the fund is closing. Let's go back to the chart here. Just understand that going in. Funds close all the time. Funds are liquidated all the time. It's not unusual. Okay, this happens every single week from across the industry. It is a little unusual, though, in spite of what's happening, with Russia and the war in Ukraine now. But we talked about XIV. Yep. XIV liquidated. I mean, that was crazy because it went to zero in one day. But funds close all the time. If you own RUSL, you just know you're going to get liquidated, and you're going to get whatever the price is at closing is going to be what you get in your account. But for all intents and purposes, I mean, it's over. This fund is over. Now, RSX is a bit of a different story here. Not a leveraged fund. Oh my gosh, look at this chart. Holy moly.
It's ugly.
So, not a leverage fund. This is a fund that holds securities. It holds shares of Russian companies that list on the London Stock Exchange. Those London shares they're called depository shares, and they are based on the performance of those shares is meant to mimic the performance of the shares of these corresponding, shares of Russian companies that trade in Moscow. Now, Moscow Stock Exchange is not open today or yesterday, probably tomorrow too. So we don't really know what the NAV of RSX is right now. It's a total guessing game. The market says our RSX should be trading at $8.89. That's where it's at right now. If you are, and I saw someone actually sent me this article from Bloomberg that apparently a lot of Korean day traders are piling into RSX right now. If you're buying RSX,
Why?
I don't know.
Like they think it has good value.
Because people, yes, it's human nature. People want a deal, right? You see the stock crash.
But like, why specifically Korean day traders? I wonder.
I don't know, but it's a great question. you see something that goes from 25 to 8 in a week, and you think, oh, or 2 weeks, 2 weeks.
Facebook's a great deal.
I'm getting a great deal here, but you may not be getting a great deal. Okay, you may not be. You and me and no one knows what the fair value, what the net asset value of this fund, what it should be. Because we don't know what the stocks are worth in the basket because the basket's halted in Russia. So I would absolutely not buy RSX now, frankly, ever, but now especially, okay? It's at an all-time low. Everybody who has ever bought the RSX since inception in 2007, if you bought it at any point from that point on and you never sold, you are at an all-time low today. Don't buy stocks or ETFs at all-time lows, but also don't buy ETFs when the underlying market is frozen. It's frozen in time.
Yeah, I would say the only flip, like, I'm not going to argue with that there. I would say the only...
Shelly, don't even joke.
I would say the only way I would, like, even consider playing this is buying some, like, ridiculous out-of-the-money calls that are super cheap, like a year or two out, like, say, like $100, and saying, okay, if this de-escalates tonight, this $100 could turn into 5,000, whatever. Maybe there's, like, a risk-reward play there where... again, I'm not going out and buying this stock, but that's a way that I would be interested.
Just please
in
don't buy these RUSL. No, JD's RUSL is being liquidated in 10 days. Okay, it's not unusual for funds to liquidate, but it means if you buy it, you're going to get your money back in 10 days, barring whatever the thing does in the meantime. Please don't buy these, guys. Please, there are so many other things to do with your money. Please don't buy this stuff. Like, first off, just from a, patriotism point of view, I mean, do you really want to support Russian companies? That's the first thing, okay? I don't. Second thing is, just from a money point of view, you could lose all your money that you invest in these things. We don't know. Yes, JD's, it's not quite panic. I'm panicking. I would be panicking if I owned these, but I don't, and nor would I ever buy them. Because again, who wants to own Russian companies, and this is a crazy these ETFs are effectively broken right now. That's what they are broken instruments.
We do have VIX hitting high of the day.
If you want to buy a broken instrument, have fun. Okay, it worked out for you, I guess. If you bought oil the day oil went negative, but the problem with that comparison though was not everyone could buy oil the day. Actually, yeah, that was the issue. The day oil went negative was that you couldn't really buy it. Only some people were allowed to buy it, which is part of the problem. But again, the oil market broke that day, and that was a great buying opportunity if you went out further along the futures curve or you bought USO or whatever. But these instruments are broken, and they will remain broken as long as Russia is at war with Ukraine. That's a fact. So
There you have it.
okay, we're done looking at that. But yeah, it's insane right now. Real fast before we hop off, we got 10 minutes left, Aaron, and I wanted to quickly look ahead to tonight / tomorrow morning. Here's the calendar, the earnings calendar. We are still in earnings season. This week is it. This is kind of the last week of earnings season, the last relevant week. There will be some reports trickling in next week. Nike is always super late. I think they report in a few weeks. But this is kind of the last big week for earnings reports. So we're going to get AMC tonight, which, by the way, we will be streaming on our channel. AMC tonight. Playboy is also tonight. And PSA, we're going to have the CEO of Playboy, Ben Cohn, on Benzinga Live tomorrow at noon. SoFi is tonight. I know you all care about that. I care about that.
Care about that.
No, honestly, I don't. Let's be honest. I don't care about that. I'm interested from a long-term perspective. I will read the press release, and we'll look at the statements a little bit. But what they say, I mean, unless they come out and say something drastic tonight, then
You're still a shareholder for the long term,
yes,
no matter what.
Yes, Nordstrom is tonight. Salesforce is probably the big one of tonight. In terms of like, quote unquote, like big boy stocks, Salesforce is a big boy stock.
Ooh,
or
yeah.
a big girl stock. So they report tonight.
CRM has been pretty quiet the past few weeks.
We can pull up that chart in a second. But Salesforce, and where was I going with that? The rest of the rest of the calendar. So Ross Stores, First Solar. Oh, Dutch Brothers. That's an interesting report.
This isn't their first report, right?
I don't think so.
No,
No, it's
no,
not.
second or
It's got to
third.
be the third or fourth by now. Tomorrow morning, Abercrombie & Fitch, Dollar Tree, PaySafe, DineEquity, Arrival, Donaldson. Man, okay, so you want to look at the Salesforce chart, so let's go there right now.
I just looked at it the other day, and it hadn't really there were other stocks in the same space that were moving a lot, whether it's Asana, Monday.com, whoever in Salesforce had kind of just been hanging out, or maybe not even hanging out is the right way to describe it, just kind of trading with the overall tech market, it seems like.
Where do I get that pick, Andy Y? I'll Slack you a link, but also that calendar was
Slack.
Whatever. Andy Y, I'll send you a message in YouTube right now. But
Speaking of Slack.
And speaking of Slack, right? Salesforce. This calendar gets tweeted out every single week from the Benzinga YouTube account, like the Twitter account. What am I saying? I can't talk. Usually every weekend during earnings season. You can also go into Benzinga Pro and just find the calendars. I'll just show you. If you have Benzinga Pro, you go to the calendars widget, like I'm at right now. You can make sure you're on earnings, and you can see all the earnings reports for today, for example. But I just put the link to that in the chat, Andy. So speaking of Slack, because Salesforce owns Slack, this is a forever chart, all-time chart of Salesforce, but let's go to a daily chart. It's more relevant. It's a great company. It's a great business. I mean, Salesforce is the king of these SaaS businesses. Now, one of the problems of being the king, being the biggest, is there are smaller companies that are growing faster than you. And we know Wall Street loves its growth, although not right now at the moment. I've always loved the business of Salesforce. I've never owned the stock before, and I wouldn't buy it now because they report tonight, unless you want to take just a YOLO trade.
Should we YOLO it?
You want to YOLO Salesforce? The thing is, you are right though. It doesn't have a very high beta. It doesn't really move a lot.
Yeah, it's kind of like if you can you overlap the Qs on there? I feel like it's just been with the Qs. I could be wrong.
I mean, yeah, there's a correlation, sure.
Like when all of tech, I mean, no, Salesforce is one of those stocks though that got hit. I mean, what were those highs back in November 21 or January 20, whatever the highs were for Salesforce?
311 looks like the all-time high is 311.
Yeah, so a little bit of a bigger drawdown, about a 33% drawdown compared to the Qs, about 20%. But it is one of those high flyers that got beaten down, but not as beaten down as some of those names like Roku, Affirm, or any of those.
Wait, I'm just catching up on the chat for 1 second. Hold on.
I'll allow it.
Hey, yeah, maybe I'm wrong on SoFi. I don't know. Zoom is interesting. The Zoom report was pretty bad, I thought.
That they had lost customers. Yeah, I think losing customers is never a great sign.
Their growth is falling off a cliff, off a literal cliff. Maybe Zoom can turn it around, but it's not their fault. Like this is the thing that sort of like would upset me if I like was a Zoom shareholder. Is like it's not Zoom's fault that like 3 years of growth got pulled ahead to 1 year in 2020, and that for 6 months or a year the stock was not a year, but for 8 months, it became everyone's favorite stock. It's not their fault. They were in the right place at the right time, but they're paying the price for it in the same way that like it kind of harkens back to like the cannabis stocks like CGC, right? For a while was like the only game in town, not the only game, but like they were the first big game in town. It's not their fault that they were like the biggest cannabis company in the public markets, and they're being punished for the fact that they were first, and the fact that they have now all this overhead supply in the stock and all these people that are underwater. Well, it should never have gotten to 40 in the first place, but that's just exuberance, and it happens. It happened to pot. And
that's interesting.
It happened in Zoom.
When you have a tailwind, but almost like the tailwind, it's like it's like Icarus, right? The tailwind pushes you a little bit too close to the sun, and that's what happened with Zoom. We can see that here with maybe without that tailwind, they just stay on that steady climb that they were on before COVID. I still think. I mean,
sorry.
No, go ahead.
Shelly said she bought Leaps on RSX.
I'm telling you, there's like a risk reward arbitrage there, where if you spend like $100 and could potentially gain 10x that off of, also the only way that works out is if we get de-escalation, then it's like a win-win, right?
Right.
You don't get World War III, your Leaps hit, and it just to me, I see the risk reward in that. I'm not going to go out and like buy common share in that, because I would rather, and the way I see it, and this might be flawed logic, I would rather put $100 in like a bet like that, to where I know it's either like 0 or going to 10x, versus if I buy $100 of common stock, I'd just be watching it go down every single day. It's not fun.
Yeah. All right. I mean, good luck with that one, Shelly. I don't know how to work out for you. I don't even know when. I'm assuming we'll know by expiration, but that's a year from now, so I don't even know when this thing will get resolved.
Also, I do hate I feel like obviously, like Russia, we're right to be critical of Russia and what they're doing here, but to act like we're like huge, big, mortal enemies of Russia when they're like one of our biggest trading partners, we import like so much oil from them. Like, don't get you wrong that like cutting off all business relationship with Russia, it'll have negative impacts on us too.
Not if we release those reserves, baby. Get those reserves going. We're already releasing them.
Yeah,
Give me more.
Shit, let's just start fracking in Texas again.
Heck yeah. No, let's not do that.
Exactly.
Let's not do that and say we did. Alrighty, that's a wrap for us here on Benzinga Live. The roadmap is live next. Is Elon Musk joining Bored Ape Yacht Club? Question mark.
Is he?
Question mark.
Is he?
Question mark. They will break it down.
Wait, before you end the show, can I make sure the redirect is
I
there?
already checked.
Okay, cool.
I'm 5 minutes ahead of you.
Cool.
All right.
Cool.
All right, everyone. Smash that like button. Hey, check out Benzinga Pro. There's a link to a discount code in the description of this video. Gets you 25% off. Do it now. Smash the like while you're there as well. We'll catch you guys tomorrow. The roadmap is live next.